Maybe there's a positioning argument to be made. People were looking for pullbacks, whatever it may be. Maybe it's part of the Fed, too, where that odds of that probability of the hike has just stayed very subdued.
Right.
The language that the Fed speakers are using about the market doing their own work for them. Danielle DiMartino Booth was on yesterday, and what point she's made to us before is that if the Fed goes 2 meetings in a row after a hiking cycle,
which
pausing, they have always been done afterwards. So her point is that if they don't hike November, they're done, and they are not hiking in November. So
well, history says they're done.
Sure.
Exactly right. But yeah, Lori Logan started it Monday morning. Raphael Bossack, I'll read you his quote. I actually don't think we need to increase rates anymore to get too high inflation back to the Fed's 2% goal. A lot of the impact of the Fed's rate hikes so far is clearly yet to come. That's his comments yesterday afternoon, pretty consistent with all the Fed speakers talking about now it's how long we stay up here, not how high we go. It appears, like you and I have talked about on this show going back a couple of weeks, Jerome Powell wants to be done. He thinks he's got rates at a restrictive enough level. Now, how long do you leave him there?
Right.
The ball is rolling downhill.
Right.
You just got to let it go.
And hey, there is definitely an argument to be made. I've made it several times in my writing, too, in our coverage here, that higher for longer could still allow rates to creep up. But the explosive move that we had in the last few months is definitely tapering here out as they are pushing back the chances of a hike.
You still got year-over-year wages at 4.2%.
For sure.
Right? Coming down, but still high number. You
Yep.
still got year-over-year core PCE 3.9%.
Yep.
Coming down, making progress, but still a number.
Yes.
CPI data tomorrow will be a big number.
Indeed. All right. It feels like one of those moments where all the Fed speakers got the same talking points. And we haven't had that in a while.
Exactly.
I mean, they are like all in line, consensus forming in a pretty big way. Thanks
Exactly.
to Kevin Hanks. All right, good assessment here of the market's response to the data. Let's bring in Ben Lichtenstein, host of the Futures Show every morning before MTL. Ben, we got the dollar down again today. It seems like that also adds to this consensus that's building around the Fed participants and voting members that they're not going to do anything this year.
Yeah, Oliver, there's a few contributing factors to the run-up we've seen in stocks as of recent. Investors' ability to focus on the positive and kind of discount the negative, the dollar being one of them. You were talking about rates and some of the others in terms of data with Kevin there a minute ago. You also, at the start of your show, were talking about the NASDAQ hanging on, right? And to me, my concern is that what the bulls are hanging on to here, Oliver, is a thread in a conditions in a market where they're going to need a rope, ultimately. Let's take a look here at crude oil prices here. I'm going to show you what's going on and why I say that, yeah, there's a lot of optimism out there right now, but maybe a false sense of complacency at this point, because crude oil, yeah, we've come off from 95 down to 81, but at 85 here, Oliver, considering the geopolitical events that are going on, this is a relatively contained trade. I think that's also aiding to the run-up we've seen in stocks. But taking a look here, we're still at $85 a barrel, right? And rates are still at cycle highs ultimately. So this is a headwind that investors have discounted. I wanted to show you again how they have discounted off the lows from Friday. When we did sell off, again, you were talking about that spike lower we saw in treasuries and then the kind of rebound back. But this low that we put in on Friday was unable to take out the lows from earlier in the week on Wednesday. So I think there was a little bit of a technical aspect associated with this rally back to 44.19, almost 200 points to the upside. I mean, that is an impressive move here. As we just kind of cycle through the charts again here, I want to point to not only did we take out last month's lows briefly and now kind of back into the middle of the range, but here's that low I mentioned, the inability to take out the low from earlier in the week. So you can see the optimism as well. Here again, we've bounced off the 200-day moving average, Oliver, so another kind of technical focus here nearing the 50. But you're talking about treasuries which have rallied back, right? The 10-year back to 108. We've seen yields come off the 10-year from 4.8 back to 4.55. But here's what has me concerned, Oliver, and this is why I say I think investors may need a rope when they're kind of hanging on to a thread, right? Something a little bit more sturdy to grab a hold of, is because we've seen rates continue this path, this trajectory to the upside. Everybody everybody's getting so excited about this small pullback here, but they forget about the
Looks like
9
nothing.
or 10 or 11 pullbacks that we've seen along the way up here, and the trend still continues to the upside, Oliver. I'm a little bit concerned here, again, just considering the volatility, the situation that's at play in terms of the Middle East, and how everything's kind of all on edge as we head into this. Again, I feel like a false sense of complacency here.
Well, here's what I'd say is that the 2-year is kind of the more compelling one, because to your point, the 10-year breaking out, I mean, that chart obviously still in the uptrend indisputably until you get a big pullback. But that's just good growth in the economy, it seems right now. All the auctions have gone fine. I mean, if an auction blows up, then we've got a different story. But the 2-year now kind of looks like it tried a false breakout, right? Because you had the 2-year chart, which never got through to the 52-week high. It tried and failed, and that's the stuff that's connected to the hikes. I mean, 10-year, we could argue, is just good economic outcomes.
Okay, I understand that investors are focused on that being more closely tied to the Fed, but you were also talking about numbers coming in line to warm, not creating that reaction that you'd think we'd see. And I think, well, with rates at these upper levels, Oliver, those numbers better be coming in strong, right? Otherwise, the
for sure.
market's going to have a hard time stomaching rates at these levels if we don't have employment very strong, and some of the other data you pointed to, the ISM, for example.
All right, FOMC minutes today, so we will get to see some more insight on some of the mindset of the Fed. Appreciate the look at the charts, Ben. Good stuff, and a good take as well. When we come back, let's get technical with Katie Stockton and an update from the S&P to gold and crude, maybe even a little Bitcoin possibly. We'll be right back.
Good morning. Adjust your speakers. It's October 11th. We've got about 5 minutes to open. We're going to be streaming the stock market today. Watching SPY, AMC, GME, Space, GNS, whatever's running. RAD was looking good. I'll be trading futures, options, daily options, swing, shares, all that. Sub up, like up, comment down. Happy money sticks around. You can follow us on Twitter, as well as we have Discord. You can join for free. Both those are in the description. I'll put a Discord link in chat as well. Thank you guys for being here. Hope you had a good evening yesterday. Good morning so far. We did have some data this morning. EPI. Market pretty unchanged from it. And yeah, let's see. We've got about 4 minutes open. SPY's up 0.28% pre-market. EPI came out here. Looks like it was probably expectations today. AMC little gap up 2%, GME up 0.8, got plug up 10%. Morning, Bubba. Let's get nuts. Indeed, indeed. Up deep value. Morning. See if we make this handle today. And keep rallying on this big cup and handle. On our way to filling this gap. Tup's up 15% pre-market. Had a pretty good day yesterday. T on Tup. Yesterday might be the start of a little bounce on it. Didn't fill that gap down there, so that's not great. But yeah, that pre-market's pretty good. Is there news on this? No news. Not a whole lot to look at. I mean, big rally yesterday with volume. Got what? $1.87 in there as a resistance, maybe. Back there. Looks like you're gonna be close to that. Yeah, yesterday pretty much broke out of the resistance. Today it's going to be above it, so maybe pull back for some support. Like to see it. It's going to sustain this bounce. Pull back, maybe yesterday's high. Maybe lower though. Like $1.05. Maybe even a gap fill. Yeah, maybe a gap fill. Looks good though. I don't know. I don't know if it's going to redo something like this. Most likely not, but after you have a big move like this, typically you'll have a couple rebound rallies. Oftentimes they're not as high and shorter lived. So, yeah. Morning, Guts. Alright, so my small trading account, probably only gonna make like one trade on today. I'm gonna try and save that for kind of later in the day trading. Basically. Here we go. Yeah, 20% up on up. Plugs up 7.8. GME basically flat. AMC up 1.8. AMCX is popping. Red, are you really up 10? Do it. AMCX is not popping. Red, 12.5. This is the way. Yeah, Tup just getting a bounce. Seems like. No news on Rad either. This is just reclaiming some of the bankruptcy fears. As far as I've seen. Yeah. I received non-compliance notification from NASDAQ a week ago. It's not gonna be a problem if we get back above $1. As long as we're still reporting everything. Which I think they are. Space is up 4. Nice. Up 30. Ripping out of the open. Let's see here. Up through that first resistance. Let's say 227. Probably next resistance on there. If it sets up another intraday bull flag. Pretty good looking. Extended hours just messes it up so much. Usually I don't chart with extended hours. I might in this case though, we'll see. Yeah, that's probably about right. Extended hours on. GNS, look at you, 7%. GNS can't kind of meet the top of this channel, then it's starting to taper. Be a sign that it's the beginnings of a pullback. %7 on plug. Peloton. I almost got a position on Peloton back here when it was this RSI divergence. Had a lot of other plays that had gone against me and that I didn't like. Hard to tell, but this is a lower RSI than here. Yeah, the MACD crossover. Yeah. Probably looks good. Maybe move up to 6.5 or so. Fill that first gap. See if we can hit the second gap. Yeah. Yeah, there's an RSI divergence on TSE too. This does look good. Similar thing happened right here with that RSI divergence. Did come back down and kind of retest it, and then he had this little rally. So maybe something again like this playing out. Could just rally up, or maybe it'll come fill this gap, then retest, make a double bottom. Yeah, TSC looks nice. Divi stock. I don't think top's gonna be all-time high soon. AMC down a little bit, still green. GME is flat. Eyes bull flagging. ABNT's up 17.5. Rad. 17.5. Do it. Do it. Oh, if it fully holds out of this channel, it's more bullish. Basically increasing its rate of acceleration. This is the way. It is right at maybe this first little resistance though. Around 90 cents. That is awesome. Awesome looking though. Increasing volume each day too. Great. We've got some shorter dated stuff on Rad too. Up. The top of that channel again, up 30%. Yeah, about that. Rad. Things halted? No. Right up against that resistance, that first one. Testing the low there. That's a bear trap, can't complain. I don't, John. I tried to get more, but I wasn't able to. Or I tried to get back in, but I wasn't able to. So, yeah, I'm actually in the market if anyone wants to sell me some of their barbecue shares. Just a little position. I'd be willing to pay 100% premium over where it last traded also. Which was like 7 cents, more than 100%. I was offering anyone 20 cents for some barbecue shares. So, if you haven't DRS'd, and you have some shares, you want to decrease your position a little bit, maybe that's above your cost base, so you can make a little something. Hit me up, Discord, YouTube. Let me know. Yeah, 32% on top. Joan. 5% on Joan. Not looking good yet, though. GME is flat. AMC is up 1 1/4. Run's up almost 3. At 3% on run. Rum is flat. Bear flagging down here. Beyond's up 1.75. Where'd you come from? Where'd you go? Where'd you come from? Cotton Eye Joe. Kramer. Kramer's up 6.8. Do better this run? Without a catalyst, and I don't know. Typically the rebound after a huge rip like this is smaller. Unless it held higher support and it was in an uptrend, but it gave that uptrend up a while ago. So maybe it's finding equilibrium though, around 2.5 or something, up here where all that liquidity was built. That's a more happy place for it. Unless something fundamentally is changing on it. Maybe there is. I'm not kept up with it. 4.6 on GNS. 5 breaking the top of that channel. Maybe. Well, let's see here. Barely is expecting that. Brad, down a bit. Expected that resistance. Maybe it'll fill the gap down here now. Yeah, I got some calls. Oh, right back down to VWAP, huh, Spy? Okay. Like that, huh? Bowman started speaking at 4:15 a.m. What the heck? Waller's speaking at 10:15. Bostic's at 12:15. FOMC is at 2. Broke the channel. Hop right back in it. Still set up this nice little inverse head and shoulders. And we do have a channel break, even though it's now down below it. Top respecting the top of that channel as well. Ellie, A little bull flag there. GME is a little bit red. SPY is below VWAP now. Wow. Wow. Balls didn't work. Hold on, one. Bounce the bottom of this channel. Let's see, 20 minutes into open. You guys doing the thumbs up, 11 of you. I appreciate all 11 of you. Wow, look at the break of that bottom channel, huh? Like that, huh? Guess it was too early for that trade. GME's coming down a little bit. 1.75. Whoa. Be down 1.1. SPY breaking new lows there. You want to play the breakout? Up coming off of the highs. Buenos dias. I'm not sure. Not sure, TJ. I haven't heard a lot. SPY's inversing the 10-year yields. Can happen. Some pretty big bounces on stuff that's been oversold. I am Root. And Root is up 2%. Liquor, how far down is that? Only 4.25 today. Cut, did you get out of liquor? Alright, we have inverse shoulder, inverse head. Break that channel. I'll grab some more calls. Rework actually looks pretty nice. A little inverse head and shoulders are on the hourly. Yeah, it does. Got an RSI divergence there also. Yeah, GNS starting to roll over a little bit. 3.25. SPY new lows there. Still filling the gap. Top's consolidating up there above VWAP. That's pretty good. Up against that resistance. There's a gap down there though. Rad rejected that 890. Solid few days though on it.
bell and beyond.
Watch live.
And on.
How's Rivian doing? Still hasn't quite filled that gap. Groupon little bounce today. Good exit. Happy with my exit on those puts. That was a gift. Big sell-off. AI's up 0.5%. Dish is flat. SPY coming down some more there. That one's up 5.
Session. Stocks doing okay. Not a whole lot to say. Nothing's really changed too much. Bonds are still firm. Dollar is still a little bit lower here. It's actually extended some of its decline after PPI came in warmer than expected. Equities are taking it in stride. Bond market too. And we continue to see strength as we're at session highs right now. All basically up the same, by the way, across the indexes. Yesterday we had a really good day in the Russell, so keep your eye on the small caps. Coming up, we're going to talk some earnings. We've got Delta kicking things off as we get ready for a big season of corporate reports that need to justify some valuations for tech, but in other areas like airlines that have gotten beat up, maybe can remind us that there's some stability in some of these trades, like we got for Pepsi too. We're going to be talking health and beauty wellness, as it's been a pretty fiercely competitive sector, and the chart master is going to take a look at some notes out with a wide variety of names: Netflix, Morgan Stanley, and CSX. Right now, I got Ben here with me in the studio, host of Futures, every day here before MTL, of course.
Liechtenstein.
All right, market hit the highs and then kind of pulled back a little bit here, but we're still up on the day, Ben, and it seems like bonds are very much at ease despite PPI coming in warm.
Yeah, not much has changed, Oliver. All four of the major indices still gaining on the day, off the highs from the session, but I think this is about what you'd expect to see. You've got the dollar, which is lower. You've got yields, which has come off. And in addition to that, I looked at crude oil, which is down around 1.5%. So all very much kind of feeding into that point we were making earlier right now about the market, kind of focusing on the positive, discounting the negative, but hanging in there pretty well considering.
The crude oil point, I think, too, is important because it could go overlooked with some of the other data we got that's captured our focus. FOMC, we're paying attention to, but we can't lose sight of this because WTI was screaming higher up until last week, hit a wall, dropped off, and then yesterday we had an opportunity again to kind of stoke the energy bulls, and it just doesn't seem like it really stuck because we got no follow through on Tuesday, and now Wednesday we're down 1.5%.
Yeah, it seems like all week there's really been the opportunity to stoke the energy bulls, Oliver, with the Middle East developments and the massive amount of uncertainty that's associated with
moving
that. But
up out of that
to your point here,
aggressive
we did
channel, see if it
rally up to
tests
$95.
VWAP.
You can see that spike on the right side of the chart.
Break this
here, and then
higher
the
channel.
swift move lower here. Now we're kind of just hanging out in the middle of the range, upper extreme 95, lower extreme around 81, right at this 87 level. 85, hanging out just about 1.5% to the downside here today. But if you look at the left side of the chart, you're going to see it wasn't just that spike up here because, Oliver, that coincided with a big move up that we saw back in October, November. There's actually two highs up there that coincide with that same level that we just recently tested and came off. So there were a few contributing factors to the sell-off that we saw recently tied to higher rates, a little bit of demand concern associated with that. Keep in mind, a big part of this move coincided with that call from Citi looking for $70 oil, pushing back on some of the trends we had seen, the Goldmans and others that were calling for triple-digit oil, tied into what we saw, again, as mentioned, with some of those demand concerns. Even comments from OPEC at that point sent prices lower. They were talking about increased exports from Iranian oil, Canada, Brazil, for example. So
they also talked about demand, too, being strong. So, I mean, the market could have gone either way. And to your point, it's just generally been a soft reaction.
Well, we've seen a little bit of that both sides kind of discussion for a while now in terms of depending who you're listening to, whether it's the EIA, IEA, or OPEC. And we're going to continue to see that, I imagine, throughout the rest of the week because we'll hear from each of those agencies still. But taking a look here at crude prices, which are relatively contained here right now, and I think that's a reflection of kind of that dual narrative that we've been hearing recently.
Yes.
EIA talking about how global energy consumption is going to increase through 2050. Now, we're going to get their short-term energy outlook today. Recently talking about exports, U.S. exports, Oliver, hitting a record high in the first half of 2023 at 3.99 million barrels per day. That's up 19% from the first half of the year last year. Don't forget, today we'll also get a look at the API on the close. The EIA inventory numbers tomorrow are delayed because of the holiday weekend, the Columbus Day holiday.
What's the most important of those? Like, what matters, you think, the most for the oil market?
I think we have to listen to OPEC tomorrow. You've got the IEA as well tomorrow in terms of their energy outlook. So I'd be focused on the producer side of things, OPEC ultimately, and really what we're hearing as far as production cuts, right? That's been a big part of what sent prices higher, if you remember. Expectations that there would be increased demand, but I think the production side is going to be the major focal point into the end of the week.
All right, nice, good stuff. Busy week here ahead for information on the crude oil market. Thanks, Ben, for the heads up, and something that we can't omit from our analysis is WTI has lost some of that upward momentum, still hasn't broken down though. An interesting puzzle for airlines to try and figure out how to piece together into their approach. We've got Delta earnings coming up. Alex Coffey's taking a look at the report. It does seem, Alex, like the market has traded airlines pretty closely to crude, where big rallies in WTI have created some softness in the airlines. How does that factor into what we should expect for earnings?
I think it really factors in, Oliver, particularly after Americans said they're not able to pass those costs on to consumers. These airlines all deal with the problem slightly differently in terms of hedging, but in reality, this is a very cost-sensitive market, and this is one that, while there is loyalty to the different airlines based off rewards programs, if the price difference becomes too substantial, consumers will throw those rewards out the window to save a little bit of cash on individual flights, particularly as things have been more and more expensive the last few years. In particular, though, your observation is exactly the proper one, which is airlines have fallen about 25% in the case of Delta from their highs, and this has basically happened over the last quarter, largely coinciding with the really impressive rally we saw in crude oil throughout the summer. Over the last year or 52 weeks, it's still a stock that is up 25%, which is pretty impressive, particularly compared to some of its peers. It is not the best performing name in this space. If you look at a name like, I guess over that
might
time
be starting to taper on the bottom
it is
here.
the best performing name, as it has outperformed United, but those are the two that are really the best two performing. Southwest has struggled as we've watched the mix of domestic and international sort of influence performance, but Delta, being the one that has been the banner performer thus far, is only up about 10% year to date on this name. Market maker move is about $1.40. As far as the results and what to expect, results and estimates have come down over the last 4 weeks by about 15% on the EPS front. Right now they sit at $1.92 on that adjusted EPS estimate on revenue of just under $14.9 billion. If you look at this over the last quarter, it's going to be a sequential decline quite tremendously on the EPS front and a modest decline on revenue quarter over quarter. One number that I'll be watching that I think is interesting, and it'll kind of show the impact of crude oil, but also labor costs, as the contracts with pilots will influence that, is going to be the total revenue per available seat mile. As we have the last quarter, it came in about 22.5. It rounds up to 23 cents. As you look at this quarter, if you just did the math and look at the estimates, it's going to be under 21 cents if it just hits what the expectation is. So that's something to watch as those costs influence the bottom line.
Okay. Like the characterization of the group, as you point out, which have done better than others. There's been a lot of dispersion within this sector, but ultimately oil is kind of that uniter to some degree. As you mentioned, some of these airlines do take more effort to hedge out the oil prices, but At the end of the day, it's something that makes its way to the bottom line more or less
Nope, guess we're
across
not.
the board. But we also have a clear market preference outside
fill in
of
this
the
gap.
oil story on a micro basis for which companies seem to be in the best position, other than Spirit, which has the JetBlue deal going on, which is kind of a separate situation. Delta and United. I mean, those are the best performers by a long shot, and so it seems like if Delta can't show something positive to surprise the market, then this whole group could be in trouble, because I gotta say, you know, the 5-year
There's a
chart
new
here
low there
still
on
is not very
SPY.
impressive for Delta or really any of them.
Yeah, it's a good point, and I think this is also one of those situations where this story is not a secret, Oliver. We talked a lot about Pepsi, we talked about Nike as well, where the sentiment surrounding those names entering the results was so one-sided and so pessimistic, it doesn't take much to just make this stock firm up slightly, even if it's just short-lived. I'm not sure we're entirely there in the case of Delta. I think the story and the impact of crude oil is a real one, unlike speculation maybe and kind of stories surrounding kind of diet pills, let's say, or diet drugs and influence on snacking. This is a clear, long-standing fight that always takes place with the airlines as they battle costs and try to keep demand high while being able to pass those costs on. So we'll see how Delta is dealing with it. I think this is going to be a pretty critical report to get an idea, especially on the day where we got producer prices a little bit warmer, Oliver, just how well different industries are able to pass these increased costs on to consumers, as that may be the early story in earnings, which is going to be margin pressure.
All right, yeah, definitely. And a good kind of update on how margin pressures have changed as the inflation backdrop has changed. It's a good way to kind of see that higher for longer environment manifest itself, right? Because inflation rates have slowed dramatically over the past year, but they are still up, and so those input prices are something that is giving airlines a little bit of a headache. But then some of it too, it seems like it's also like a competitive element, maybe a little bit of mismanagement on labor and the ability to have enough supply to get people where they want to, and because there was a lot of interest in travel, but kind of a lack of supply for pilots, the planes themselves too. So some of this, I guess, is going to be stock specific and company specific.
I still filling this gap.
Macro too, which is why it's fun and a tough trade. Frankly, it has been a tough trade for airlines. Thanks, Alex, for helping us make some sense of it. Let's bring in Joe Teagate, portfolio manager of the Rational Equity Armor Fund. This is one of those few groups, Joe, where you could argue it one way or the other, and both of them are going to sound compelling to me. It's just like a really tough group, and I think the chart reflects that since COVID. Ups, downs, ultimately kind of sideways now for a couple of years. How do you approach it as an investor?
Yeah, since COVID, it's really airlines have been an area I've tended to avoid. They've had kind of a really rough deal put on them. It's been a tough slog for them. But yeah, as you mentioned, very oil sensitive name. It's been the case the past quarter. Just look at the last month, and Delta Airlines went from almost $50 to where we are now to almost about $36. So it's been a steep decline, and yeah, it's very sensitive to oil. But oil, thankfully, is getting a little bit of a pullback. It has come so far. Also, we have these expectations just recently dropped. They are very low. So I think we're in a spot where we have very easy to match or perhaps slightly beat expectations. I think it's a spot where volatility is a little bit higher. I think it's reasonable to come in here and just sell some downside puts, say, put a line in the sand, say I'll buy it if it goes below here finally after this steep pullback we've seen. Otherwise, just collect some premium and move on.
Yeah, this really is like the last bastion of technical hope. The fact that Delta's been able to hold $35. You drop from 50 roughly to 35, but hey, the 35 is above where it was last earnings, which is
below
above
VWAP,
where it
still
was the previous
21%.
earnings. I mean, there is still a line you can
Joan
draw
up 10.
from the 52-week lows that does connect, and arguably means it's in an uptrend. But boy, is it a flimsy one.
Morning, Guts.
Yeah, very sensitive to the economy, very sensitive to oil. So yeah, it is more volatile than you would expect for these airlines. But yeah, it has been flying around. But again, if you were just to look at this trend line and say, hey, $50 or $49 is not an area where I'd like to buy. $35, yeah, that'd be an area I would want to get in. Just given what we've seen in the last year or so. So yeah, I just be looking at just very, very short term, this weekly expiring Friday, 36, 33 put spread. I can sell that, collect 70 cents. My break even would be 35.30 or 35.30. So if we do get that pullback, maybe 4 or 5% lower, I'd be my break even. So very comfortable with that. Very comfortable with this nice risk reward just to hold this put spread through the end of the week. Just collect some elevated premiums if nothing happens, or if Delta Airlines does trade higher earnings.
All right, yeah, makes sense. Pretty straightforward trade, right? I mean, looking for it to hold its ground here and hold that trend line basically at $35, and you're getting a pretty good amount for it because the volatility going into this is pumped up a little bit. So you get $70 or 70 cents, $700 for each one you're doing.
Yeah, that's not too shabby, and I also have that defined risk. I have that 33 put stopping me out if there is, a catastrophic big miss, which I don't necessarily expect. But I do have that defined risk. I know what I have on the table here, so very comfortable with that. The odds are in my favor, and let's say I am put to this. I have to buy the stock below 36. Very comfortable next week. Just go out, sell a call, sell 35 call, for instance. Be happy to just continue to overlay it and collect some more premiums. While I'm expecting a bottoming formation here for the end of the year. Fourth quarter is seasonally pretty good. Seasonally before the election is pretty good. I know a lot of people were very nervous this weekend, maybe deservedly so, but that's just a feeling. A lot of people trade on feelings. That's not a great way to trade. Better way to trade is just following the trend lines, seeing what's actually happening in the market. And so far this week, I think people who have done that have been rewarded.
All right. Like the trade makes sense. Thanks, Joe. Getting a little bit of action in your direction, too, here this morning with Delta up 1%. So if you put on the trade before the market opened or as it did, then
we work up
so
9%.
far, looking for Delta to hold the line.
Yeah, looking good still.
After earnings tomorrow morning. When we come back, let's talk some more of the consumer stocks, but an area that has been fiercely competitive and so far not susceptible to Ozempic, a weight loss disruption. The list is getting fewer of groups that are omitted from the Ozempic risk. So let's move on to one that seems to have its own catalysts. We're going to be talking about the dominance of ELF versus Ulta and others, but some weakness creeping in across the group in the last few months.
I want to get some Wii shares. Weird. Melody. Give me issues again.
Does that mean some of the more luxe lines might do better in this category?
Well, yeah, and so in a tougher U.S. macro environment or consumer environment, I think e.l.f. actually will benefit just given the price point. You could see some trade down. They also just bought the skincare brand Naturium, which is at a prestige price point at Target. That prestige area in skincare has been very hot, growing above industry trends as I think consumers are trading down a little bit and realizing that they can get similar prestige products at a lower price point within the mass channel. So, I think e.l.f. is very well positioned, in terms of the prestige brands, Estee Lauder's brands. They've struggled a little bit, partly because China had continued to be so weak. We are seeing some better travel trends as they've allowed tours to open up now. And we've seen some better numbers through travel retail. So, hopefully that shows up in the numbers when they come to report. But I do think that a lot of the Chinese consumers did continue to buy beauty, even, during COVID. And so a lot of things that they are buying when they do get out now are more things like handbags. Also, there was a lot of inventory that needed to be worked through in that channel. So it's going to take some time probably.
437 dailies? Why so far out of the money?
Sales trends show up for Estee Lauder.
Okay. Yeah, this thing's still just getting pummeled by the market, but it sounds like maybe some, kind of like on the margin, maybe
saw Wes Christian talking about that like a year ago.
Reversing. Is that kind of a fair way to think about some of these factors?
Hopefully we see it slow when they report next. I guess one thing, though, that could stunt that is, the slower growth now that we're seeing in North America, right? So as maybe China picks up, you could see that offset with some slower growth in North America, particularly in that department store channel where Estee Lauder is very much exposed. About 30-40% of their North America sales come from department stores, and they've, had a tougher time driving traffic in. So, that's the one thing that keeps us on the sidelines with Estee Lauder is just that, even if China does pick up, we could see North America slow.
So still the department store connection is a burden. It's amazing that the market hasn't worked through that. Is that just that there was too much optimism, or has something in terms of the valuations that were assigned to these companies connected to department stores, or has there been just further deterioration in department store traffic?
Yeah, so department stores, nothing new here, right? Even pre-COVID, we've seen a lot of their store base, though, rationalize, which has helped out.
Or no, not new low, maybe double bottom.
Consumer spending continues to slow.
It's to fill that gap.
One of the ones that, is seeing more pressure than, say, like Ulta or Sephora is still driving very good traffic.
Okay. So right now, Estee Lauder, lower ranking in your list with the hold. Another one that's got a buy rating alongside ELF that kind of transcends a little bit of just the pure kind of makeup and beauty category and into some of the
trying to buy some WeWork shares, and Fidelity's not letting me do anything.
I feel like it's kind of an underappreciated story. You've talked to us about it before, but give us the latest.
Gotta change.
The chart feels like it's got something for everyone. Bulls, bears, kind of stuck to some degree.
Yeah, the recent quarter, they reported very good numbers. However, the guidance was not great. They kind of I guess hockey sticked everything into fourth quarter. They had some deliveries or sales, wholesale sales shift out of third quarter and into fourth quarter. They said that retailers are ordering more cautiously and things are turning back to a replenishment mode. Whereas, during COVID or during the past couple of years, retailers more looked to stock up because it was hard to get inventory and they wanted to make sure that they had enough inventory. But that's really normalizing now back to more of a replenishment mode, particularly for these items, such as like hair liquids or, cough medicine or Vicks VapoSteam, things that are more kind of a, everyday item or staple type item. So, that's part of why the stock sold off when they reported is the guidance just, didn't please investors basically.
I feel like there's a analogy almost to be made for like consumer products. There's some of these staples companies that spent years kind of rolling up different like food items and basic like pantry items and stuff that now over the last few years have tried to like clean up their big portfolio. In other words, they sort of got kind of too general and broad. Does Helen of Troy risk that in all the different brands that they've got under their umbrella, or can they become just sort of like a supplier to the online pharmacy world?
Yeah, no, I think they're fine. They're moving into actually higher growth areas, such as with the acquisition of Osprey, the acquisition of Hydro Flask, the acquisition of Drybar and Curlsmith. So the hair liquids are growing mid to high single digits. So they are, trying to diversify their portfolio and, moving away from staple-like items to more these kind of higher growth areas or trendier brands. So I think that, that's definitely the smarter thing to do. And they should see better growth as a result. Potentially they could shed some of these, more staple-like products, such as like the fans, the Honeywell fans that they own.
Okay. Always interesting and a helpful update for us. So Susan, appreciate the deep dive. Good stuff.
Thank you. Take care.
Absolutely. Ms. Anderson is the managing director at Canaccord Genuity. All right, with the buy rating still on ELF, Helen of Troy. When we come back, Chartmaster's got some more notes for us from the sell side to look through. Three very different companies. Morgan Stanley on banks, Netflix for streaming, and CSX.
My account lost so much value that Fidelity restricted my trading. It's weird though, because it's not. I lost a lot more value before. I don't know, Gringo. I really don't know. That's not the historic norm. Yeah, there goes WeWork. And I'm busy chatting with Fidelity. I've never been so nannied with a brokerage before. 11.3%. told Sky I've not a fax machine for decades. It looks like they have to manually print this PDF, sign it. This is the most ridiculous. Okay. Okay. Well. $11.36 again on WeWork. Oh wow, you're just really scalping those, huh, Guts? Fine, not ready. $12.25%. All right, I got transfer out of. Thing is, I don't think I can do dailies on Webull, but it won't let me market order most of the time, which is super aggravating.
To me, though, is our yellow 21
Here's WeWork,
because it roughly lines up with our volume
14%.
Nice. To the upside, we'd want to break out from beyond this trend line here. So just above 32, maybe 32.40, 32.30. That would be what the bulls, I think, would want to see.
Earnings coming up next week, well supported.
Yeah, it's choppy
averages
for
between
now.
30 and 31 bucks. A lot of volume at 31, so it seems like there is some good technical support for why analysts are so generally bullish on this stock right now. Really like the chart, the lopsided triangle with the longer end being the uptrend too. So kind of another piece for the bulls there. Despite not obviously trending higher, pretty good support technically. Let's go over to a chart that kind of has some, I think, resemblance to it in a way, which is Morgan Stanley. And with the banks coming out, Jenny, the note here from an analyst ahead of the earnings right around the corner is timely, I guess.
It is timely, and I would say that this note encompasses so much of what we've heard from analysts lately, just overall. They don't necessarily see shares selling off. They just think right now they're fairly valued. So they did downgrade shares to neutral from buy, so taking on a more cautious stance with a price target that was cut to $84 a share, down from 110. And they said that despite the company's successful transformation now into this wealth management focused firm with a solid and peer-leading growth profile, they're confronted with obstacles that include deposit sorting as well as yield seeking, as well as competition for talent and this challenging revenue environment, saying that Morgan Stanley has actually
16.5% now on WeWork, 16.8.
Priced at these current levels. Now, this name does have 64% of
Jeez,
analysts
Fidelity.
that do rate it at a buy. Of the 25 analysts covering it, and the average price target is $96 a share. So that implies, 20% upside into their report next week, next Wednesday, before the market opens.
gap fill.
Morgan Stanley report. So they're a little bit later also to some of these.
All right, I'm going to transfer out of this. This is actually insane.
Gives time for the market, the dust to settle. Or then we could also see it have its own major catalyst, obviously, when they report on Wednesday.
A lot of disappointment so far by analysts with the stock then, because, it's broken down If you look at Morgan
Which
Stanley,
17%,
next to, like, JP
18.5.
Morgan, the charts look like night and day just in the last few months. So this negative tone kind of piling on before earnings, not particularly encouraging. But they kind of weaved in a few
20%.
positive things there, but not much.
And I feel like JP Morgan has spun the narrative the right way. They have a leader that
Up
basically
also
gives
moving
the
up a
best
little bit,
earnings call. I mean,
35.
Jamie Dimon's earnings calls are the best.
Sure.
Morgan Stanley is like the stepsister to that.
Well, it kind of sounds like also they're
Sucks.
talking
We
about
saw this
some of
WeWork
the
at
concerns
9%,
from
and
banks earlier
Fidelity
this
didn't let
year.
me trade
We're
it.
gonna apply a little bit more to Morgan Stanley than like a JP Morgan, which has just been swooping in and like buying up some of the more distressed, not technically distressed assets, but colloquially distressed assets. I guess maybe technically distressed too. All right, so Morgan Stanley clearly downtrending here, it seems like, Rick.
I think we got a little technical distress here on the chart here because, you know, we've got a downward sloping channel here. We're down about 21% from those yearly highs. And if you look at this blue dashed line here, the downtrend seems to be accelerating a little bit here. One of the things that sticks out to me most notably on this chart was that we found some support near the $83 level. This red dashed line bottomed out near there several times. We topped out near there again after we broke through to the downside. But look at this, head and shoulders pattern. Real clear one. And it's not too much help to us right now because it's already played out. If we had talked about this maybe several weeks ago, this would have been something that would have been exciting to note here. But the neckline is still important. This red dashed line where we bottomed out here, this was an area that was support numerous times here. Now it's something to watch for resistance. So the 83 level is really something you should have your eye on here if you're looking to trade this name here. You know, head and shoulders pattern typically regarded as more bearish. It's something that once you break through the neckline, that's where the other shoe kind of drops here. We did find some footing here at the 78 level here. So
is sell order
horrible,
much
not
higher
a
than the
huge
option?
breakdown, but certainly not great for the bulls here. RSI improving a little bit here. We did cross out of that oversold area, but we're still bearish here. So nothing,
yeah, I guess
you know, no
have to
hidden
just
clues or anything in this one. No
figure out
real
a system
big
to be fast on it.
divergences or anything that I'm seeing for this name here. Now, if we zoom in a little bit and look at some support and resistance, we can see here that, as I said, 78 is the lows to watch right here. If we break further to
I gotta
the
get out of
downside,
Fidelity.
the
This
bottom
is
end of the channel, that's usually a place that many
insane.
traders probably would start looking for support near about maybe 75 or so. If we move to the upside, you know, we've got our 21
Oh, this
day,
was from
but that net
March.
the 83 level I think was really important here. Then we've also got an interesting confluence right around the 86 level or so. We've got our steep downward trend line in blue, our volume profile point of control, and our 252-day EMA. So that could be an area worth watching.
This is like the last chart flipped on its head, whereas all the moving averages were acting as support, all the moving averages in the volume here look like they're acting as resistance. So a much more obviously pressured stock right now with Morgan Stanley. A little bit of firmness here going into the earnings next week, and only down 0.5%. With the note out being pretty bearish this close to earnings is not the worst response by the market. Last one on our list, Netflix. Very different looking from these last two, Jenny, but yesterday we talked about how they need to amp up their British programming because they're losing some viewers there.
Yeah, Neil, I had so many issues with that story because it was last year. So that was all 2022 numbers. Right. So it's like that doesn't matter for their earnings next week. They have earnings next Wednesday also after the closing bell. Next Wednesday is a major day for some of these major companies that are reporting. But Morgan Stanley today cutting its price target on Netflix still to $430 a share. So I don't know if you could call that outright negative. From $450 though with an equal weight rating. They said they're trimming their estimates on this higher content spend and saying that Netflix deserves a premium as the streaming winner with global scale, but argues that consensus estimates with its current valuation reflect too much too quickly from password sharing.
If you put it over
and
the bid, I'm assuming it fills you at the bid, right?
Of its valuation, and saying that things are right now priced correctly into their earnings about. I feel like that is the tone we've heard across the board from so many analysts. This name does skew the least optimistic of the three, but also has the most analysts. So take that sample size is much larger. Of the 44 analysts, 59% do still rate Netflix at a buy, though, with no sells, 2 underperforms, but the average price target is $465 a share, which implies, I mean, a 24.5% upside from here. So Street still likes this name, even with this recent pullback. And I will say, again, that UK story to me is like, that was fiscal 2022. So that to me is so far in the rearview mirror.
This is why the market didn't care so much yesterday.
Right. Based on some of these new measures they've taken, they've raised their prices in the UK recently. They've done so much since last year. 2022 to me is like a lifetime away at this point for Netflix.
True. The average price target's still higher though, but below the high. And apparently there's some agreement happening.
No,
with,
I'm getting out of Fidelity.
writers and actors too, so maybe we'll get some new content. That being said, Reptile featuring Benicio del Toro is easily the best film I think Netflix maybe has ever made. I don't know. That would be my take. I think
That's a hot take.
Well, I think most of their films they've made have sucked, frankly, but that one was actually pretty good. It wasn't great, but it was decent. All right, go ahead, Rick.
I'll have to check it out. But, you know, if we zoom out a little bit and take this chart back a little further than 1 year, lopsided triangle again. You can see the long-term blue trend line with a shorter-term trend line going across the highs, kind of forming this triangular shape here that's much more skewed toward the longer-term trend line here. The twist is that we did break to the downside in this one. So the trend line has failed. But we didn't really get a bad, terrible breakout. We found some support. 369 level, about where we topped out here, about where we topped out there, about where we found some support once again here. It also matches up with our purple 250 2-day exponential moving average, so kind of a support zone between maybe 369 to 372 or so. And we can see, looking at RSI, another thing that I thought was kind of interesting, little bit of bullish divergence here. Price was trending downward, RSI was holding firm. We made a brief dip into the oversold area for just 1 day, but we did make a little bit of higher lows. You might have to squint to see it, but it is there. Now couple that with holding above support, holding on here, and we can see that, you know, maybe that's a recipe for a little bit of bullish movement here. We're still kind of sandwiched in between our moving averages.
You can probably send it at that price and it won't fill it. I mean, it'll fill it. It'll fill it at the bid though. It won't fill it at 80.
We want to see some improvement with
you know what I mean? That's basically a market order.
Maybe if we can pick up and
But
head above our.
that's why I wasn't sure, like with Webull, maybe
that was the last point
maybe
where
they'd pull
we
something slimy.
Tried to make an attempt to cross above it yesterday. We didn't quite make it above there, but that would be one step in the positive direction. Look for our old upward trend line to become resistance as well. That's a resistance point to watch, but really this is the area to hold.
Yeah, we're really riding that long-term moving average here pretty well the last couple weeks going into this. Even with the pullback, it's a pretty solid-looking chart, you know, because there's just so much behind it the last year with that uptrend. But it would obviously be much more comforting for bulls if we got back above that uptrend line and into the upper 300s. So some work
Below there on SPY
for sure, and a kind of a murky fundamental outlook right now, according to the analysts. Thanks, Jenny, on the notes, and Rick on the charts. When we come back, we'll get an update on the autos from Caroline. Latest with Stellantis, and this time a little different than the recent drumbeat of labor-driven news. This is more about EVs. Is that right?
Oh my gosh, we work 24%. Fill in the gap. Coming down more. I'm chatting with Fidelity. Right. Like, what's the point of using Fidelity? Like, I don't. If it's not good for trading, like, oh, great, you can hold it stuff long term in it. But why not have one that's good for trading to hold long-term stuff also? Like, long-term, you don't do anything, you just leave it. So it doesn't need to do anything. Yeah, SPY's still chopping around. Well, the good news is it filled the gap, so that's what I was looking for. We're ready. Infidelity. I just don't know if I want to go to Weeble with it. It's just, I like to look at the chart. I guess I could have 2 instances of Weeble running. I just look at the charts while I'm trading and use Weeble charts. I guess I could put it at the bottom. I'm judging you for sure. Getting raving calls. There you go, SPY. Sucks the balance transfer or account transfer also going to take a couple days, so I won't be able to trade. And we've got CPI. Oh, there you go. There you go. There it is. There's a break of VWAP. Having fun talking to Fidelity. Missing stuff. 25% now on WeWork. %26% on WeWork. like E-Trade either. Better, but respecting right at the top of the channel. That was a jumpy move. We should go back to Robinhood. Jeez, it's a one-time thing. Freaking mess. One time. Oh my gosh, I'm gonna put this on Discord for you guys. It's really cute. It's just the most ridiculous. Like yeah, I'm picking up some calls there. So they have a fiduciary duty to tell me. What the heck? You can tell me, but don't say I can't open a position anymore. Hey, you suck at trading, you've lost a ton of money. Cheers. You're one of us. That could have been the letter. Not, hey, you suck at trading. Guess what? We're not gonna let you trade anymore. What? It's up. Moving on up. That's pretty solid, 40% there. Well, let's see. This was over 10% move. That's 200 something bucks that Fidelity cost me in the last couple hours. Maybe I should invoice them. This is insane. It is insane. Yeah, I gotta figure out when a good time to transfer is. I think this week's probably not good. Just with all the stuff going on, but I do want to transfer out of Fidelity. Never again. I mean, they're awful. Like, they don't know that there's a new, younger generation of people that are trading. They definitely haven't adopted to it at all. If they do know. Oh, this is insane. Spy. I would take some profits here. Let's see. I only have one contract though, because this is on my trading account, which I blew up yesterday, and I can't trade Fidelity because I'm a bad trader. Where is contact us even? Customer service, contact us. What was it? We're still on this channel. We gotta break this. We'll complete this cup. Spy might not want to do that though. Stupid play on that break. So dumb. No better than that. Okay, they reject that channel perfectly. Perfectly controlled action so far. Dude, the instructions on this are like referencing this file number below the subject line. You can't e-sign on Fidelity. A transfer title. I told the guy in chat, I'm like, can you not do this? I'll be transferring out. I'll be closing my account. I said, if you can't do this, I'll be closing my account. And then he explained how it's a one-time thing. So basically you just, the one time of you losing money in your account, they send you a disclosure you have to sign. Then you have to mail it back, and then they won't bother you about it again. And they'll let you trade. But this letter was referencing March. It said in the month of March. Like, dude, that was almost a year ago. What? Okay. If you wish to continue your current investment activity and strategy, please immediately sign the enclosed customer acknowledgement and send it back to us. Upload the...
Is worth watching. Fortunately, rates have risen quite a bit lately, and the market's doing some of the Fed's job for it, and that's really their message. So I think they're okay with where rates are at the moment, and they're starting to flow through the economy and having some impact. But there's lots, whether it's wage pressure, energy. I mean, you can point to multiple things here that are still underlying significant rise in inflation, and the data is just not coming down fast enough. So it's worth watching at this point.
Right, understood. Okay, and we'll get our Fed minutes later in the day today, so we'll be watching for that. In the meantime, now there's more talk once again about hard landing and recession. It seemed it wasn't that long ago we were saying soft landing and things look good. I mean, what makes this change happen so rapidly? The way now we're changing our language a little and outlook.
I think that if you just go back a brief period, as you're suggesting, soft landing was the consensus, and the market was pricing that in. And it got a little too far ahead of itself in my mind in terms of, a rosy scenario like that. Everyone would like a soft landing, and that would be the perfect scenario. But when the market prices in the perfect scenario, we're bound to have a bit of a pullback, which we saw toward the end of the quarter with rates rising and some concerns. And so it seems more likely that there'll be a slowdown. It doesn't mean that could crater the market. It just means that once we're priced for perfection, we're bound to pull back a little bit, and then we have to have these dramatic turnarounds and conversation about how we're going from a soft landing to a hard landing. In reality, we're probably going somewhere in between, and market expectations just got a little ahead of themselves.
Right, understood. And, we were showing some of the headlines. It's just worth mentioning to folks that you had Kashkari and Bostic speaking. Kashkari was talking about the higher rate environment, and maybe now that it's possible the Fed could do less. And Bostic even said that, you don't need to raise anymore. It seems a little more in that camp. That being said, can we talk about some of the sectors? I know you don't do stock picks, but for people who are interested in the market, sometimes we have people who say, don't leave cash on the sidelines. You should always have cash working. Tell me where you might see some value, whether it's sectors or I know AI is something that's been an investment theme. Tell me about some ideas that you watch.
Sure. I think that there are plenty of places in the market still to selectively put money to work. And two of the areas we like the most are the industrial area and the energy area. And so those two areas still to us look like they're significant value selectively. And we do believe, and it seems likely, that this AI, the real spend behind AI, not just the hype behind it, but the spend behind it is clearly happening and will continue to happen. And so when you look through there are multiple industrial companies that can benefit from the different areas, whether it's electronics or power or cooling. And when you look around the world and you think about supply and demand on the energy side, clearly, again, unfortunately, this week, we're having another conflict that could have an impact. We think energy prices stay higher for longer, and therefore the names that are out there still look attractive to us.
Yeah, I was talking to a CEO of a shipping company, and look, of course, they follow oil so closely and was leaning more towards the higher end, that the path of least resistance for oil was to the upside. In the big picture, I mean, when people look at investing abroad, do you consider that too?
Absolutely. I mean, you have to take a look at that. And so there are certain, as you look abroad, there are certain countries clearly that are more commodity centric than others. And they will benefit from a higher for longer type environment like this. Within the U.S., I would say that even the companies within the U.S. that are in the energy sector, they're now focused more on returns, meaning returns on capital, and more focused on returning excess cash to shareholders.
Nice, AMC. I closed my calls this morning.
Or increasing supply at a lower and lower.
They're for next Friday. I didn't want to keep the risk on. They're profitable.
Way managements are approaching,
and they'd been down quite a bit for a while.
Putting that incremental dollar to work and trying to impact supply and demand is in favor of higher for longer, and frankly in favor of the U.S.
Yeah, they just woke up with a spy there.
From a price perspective.
Jimmy's flat.
Yeah. Mark, great to see you. Mark Giambrone, thank you so much, of Barrow Hanley Global Investors. Thank you, Mark. Coming up next, it's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the technicals. John Kaufman takes us through the trades. He's looking at the financial sector. Tomorrow's the big.
I wonder how long I'll have to wait for them to activate it. Now that I've pissed off the manager, they'll probably just take their time.
But this week is the
I put a note out. Notify me when that email comes in.
Amazon. More coming up right here on Trading 360.
I think we still has some to go. Probably could fill that gap up to $3, but I've missed out on 11% of it. All right. It is interesting their timing, because this was from back in March, and the letter's dated September 6th, and then I just started being successful with my day trades on Fidelity really in the last week or two, where I've been consistently making gains on it, and then yesterday specifically was a good day on it. And then today they shut it off. I'm just thinking they may not like kind of working around the cash account. I don't know, because it's very, very unspoken and kind of hidden. Like the brokerages won't really tell you, oh, you could just, that's not really an option that they suggest, is having cash accounts and you can day trade. Because I'm swinging 5 to 10, I'm swinging the full 10-15 grand of buying power I have on here every day, and then it's back available the next day. I don't know, it's just odd, the timing. Buy back below view up there. Yeah, it's still stuck in here. Still stuck in there. If I'd waited on my calls, I could have had a nice little trade here, but didn't. I tried to play the breakout. We suck again. We'll see. It could just be kind of building a more liquidity to break out. Thinking. Got a little inverse head and shoulders here. Give me a little cup and handle maybe here too. This will be the big break. If Fidelity can turn me back on by then, that'd be great. Spy. I blew up both my accounts today. This chop. I guess market's kind of waiting on FOMC and stuff. Makes sense to chop today.
You know, what do you think? Take a look, Ben Lichtenstein. There could be.
All right, coming back down.
You know,
Got a little head and shoulders here.
Don hasn't been caught up in the recent bullishness.
Question
We've seen
on that
quite the
resistance,
run-up,
the top of that
over
channel.
the last few days with the broader market after bottoming out last week. But when you take a look at the longer term, you're going to see that is very much still in a bearish type pattern and still trending lower. Let's begin first and foremost with the move that we saw, as I mentioned, from the lows last week. We're talking down around this 32 level up to, well, around 33.50, we'll call it. A very well-defined trend environment to the upside. Bottom left, top right, there has been some momentum, but this is a short-term chart, right? Let me show you, even on the way up here, on these 15-minute candles, you can see areas of consolidation where the market's held. So what we have right now is migration of value to the upside. The bulls want to see continuation of this pattern, a big move to the upside with the new area of value forming at a higher level. And the bears want to see us take out
it bounces on the bottom of this channel now.
Bouncing around this 33.40 level. That's the line in the sand where if we start to roll over, that's the area you're going to want to keep an eye on. Ultimately, that first indication that we're losing momentum to the upside, no longer forming value at higher levels, and in fact taking out key areas that were established on the way up. Why do I say we're looking for a sell opportunity here? Because that longer term trend has been and continues to be the downside. So if you're trying to participate in the longer term trend, you're looking for a failed opportunity at an upper level. In this instance, migration value has been and continues to be to the downside. And then look what's starting to happen here. Speaking of a failed attempt to take out key levels and upper extremes here. Well, look, we just recently tried to take out highs from September, or I'm sorry, highs from the end of September up around 33.50 and failed. So potentially rolling back over 3280 on the 1 hour candle chart. A key area to watch here. That would get us below that pivot here and ultimately signal further weakness, potentially, that is, to retest the lower extreme. And speaking of longer term charts, as we just take another step back, you're seeing that since basically the fall of 2021, when we topped out in the end of 2021, beginning of 22, we've been seeing areas of value form at lower lows again. 2 in this instance, 40, currently bouncing around 33. Here you can see, though, as we're teetering around the pivot here. This is stock, or I should say, this is a ETF that's been coming off and continues to exhibit weakness. I think it's important to look at that longer-term trend in this instance.
That's a pretty aggressive sell-off really from the top of that channel.
You didn't get caught up in the first place in some of the recent celebratory action that we've been seeing in the market and resiliency. And, you know, I don't even like using that word celebratory action because we really do have a major crisis in the Middle East. So, you know, while we get excited,
double top there on AMC.
For 4 days, we have to keep a bigger picture. So I think that's worth noting. Okay, so let's leave that one there and get to DraftKings. Did you have any final thoughts, Don, on the XLF before you get to DraftKings?
No, just ultimately when earnings start to come out in the next few days, look, I'm really curious to see what JP Morgan has to say, but any number of these banks could actually, again, take significant risks because of that, what can only be described as a massive sell-off inside of that bond market. Look, somebody's going to be holding the bag of risk, and we're just going to see how that actually plays out inside of the broader sector.
Okay. Tell me about DraftKings. This one you like?
I do. It's bullish, but this is what I call bullish for all the wrong reasons, right? So the economy starts to slip. Everybody's talking about, you know, hard and or soft landings again. And in times of trouble, what do? Drinking and gambling stocks. So that's kind of an old school thought from back in the Chicago trading days. But DraftKings, I think, is actually extremely well positioned here. Moreover, I think they're very close to a breakout to the upside. So DraftKings above like the 32 level right now could be effectively the sign of a breakout. And I'm going to trade exactly for that. So this trade goes all the way out to January 19th expiration. I'm going to be buying a 35 call. Again, buying a 35 call, selling a 40 call. So I'm going to go for a full $5 wide spread, but giving myself ample time. That's a big move, you know, for a $30 stock. This trade is done for a $1 debit. It's a shot, if you will, to the upside on of course, DraftKings. And really, this has been taken off stellar start to the betting and gambling season.
Okay, and that's the whole thing. I think people got on board during COVID, and now with more, obviously, the regulators seem to be more on the gambling side. You're seeing more freedom, and the action is on in full force. Tell me your thoughts on the chart here on DraftKings today, Ben.
DraftKings, much like the ETF we just looked at, trending higher, and you can see on the
my calls at the top of that.
Time frame very well defined, bottom left to top right. But I like this one, the long side.
I'll close it if we get back up there.
Term time frame as well, which you can get into in just a second. But let's begin first and foremost with a similar pattern in terms of the move off the lows that we saw last week. Again,
not the right mental state.
Basically, just been marching higher, bottom left, top right. We're going from, we'll call it 2750 all the way up to 3080. So not a major move to the upside, but definitely exhibiting what we look for, right? Migration of value to the upside. Why do we look for this? Well, because it gives us structure ultimately. It gives us something to base trade on. And as I take a look here at actually trying to make sure there it is, have these areas that mapped out, you can see. Again, we're looking for that kind of reference point to base the working assumption that we're seeing areas of value forming at higher and higher levels. As long as we're holding above, 3040 right now, then we're going to consider this still in a bull trend. We actually just broke out here today and have started to form a new area of value at higher levels. That's exactly what the bulls were looking for in continuation of this pattern that we have been seeing to the upside. Now, let me show you here because we also have that playing out here on the more intermediate and to longer term as well. Taking a look at this instance, we got 4-hour candle charts here, and you can see a similar pattern. Staircase, right? Bottom left top right, areas of value that continue to form at higher and higher levels, retracements that have been limited, right? Even this retracement, as I look at it in August, notice how it held above 24. That was the key area at the time, right? Because we had broken out of that range to the upside, started to consolidate higher. And even at that time, you probably would have looked at this as the new area of value. You didn't want to see this happen, but it held the key area. Again, that reference point that we have as we see trend forming higher. So what do? We just kind of revised our outlook here, have a new big area to watch, 29, pivoting and above that right now, which I think is key. Speaking of above that, well, we're also above the 50-day moving average, holding well above the 200. That didn't even really come into question, right? While the S&Ps were down testing that. Look at how strong DraftKings was relative to the broader market, which speaks to Don's point, right? Booze and gambling, right? In times of stressful, difficult times that you were pointing to, Nicole, that we're in. But you can also see how we're in a bit of a range up here, currently balancing.
AMC's up 4%, so we can break out of that double top.
Lower extreme around 26, and again, in a bit of a bullish pattern.
Rad, consolidating up here, up 18.
Those averages that you brought to us there and just showing that bullish pattern. Thank you for all of that. Don, last but not least, you have Amazon. If you had any final thoughts on DraftKings, feel free to add. But Amazon, we know that it's Prime Day again. Your thoughts?
Yeah, well, first of all, on DraftKings there, it's an uncomfortable position where Ben has actually agreed with me on 2 underlyings here. Let's see if we can change that on Amazon right now. So on Amazon, I'm taking a short-term bearish position, and this is predominantly based on the sale that's going on right now, the Prime Day. It's again, just is not doing it for me, and which is incredibly anecdotal, but I'm willing to take actually that shot here in the near term, see if the Christmas season is actually kicking off an effective
5 minutes to you close.
right now.
How are you guys doing?
Side of that. So
Thank you.
Amazon,
There's 16 of you that
I'm coming
thumbs
out
up
to
the stream. I appreciate it.
27th expiration. As I said, it's a much shorter duration trade. I want to get this one on and off before earnings, right? So October 27th expiration, I'm just going to buy the 131 puts, sell the 129 puts. It's just a little
We're stuck in this channel
wide spread. It's what we call an in-out
all
spread.
day.
Like one strike in the money,
That's
one
fine.
strike out of the
I
money.
need to.
This one's done for about an 85-cent debit, and we're looking
Need to get Fidelity working.
to break in
Because
the
right now I
next
just have
couple of
calls.
days regarding,
Sucks.
of course, how did some of the prime sale turn out. And at this particular point, I think it's going to be a rough ride into the end of the year.
Rough riders.
Right. Thank you for all of that. And as obviously the determination of Prime Day number 2, I'm curious too. Maybe I can find something that you don't agree on today before he looks even at the chart. You know, there's such a talk here on the floor about if people like Birkenstocks or not. Don, I'll ask you, love them, not so much.
Oh, they were definitely not for me. And again, I live on an island, so I'm a non-Birkenstock.
Okay, so and we're not talking about the stock, we're talking about the shoes. And Ben, love the Birkenstock shoes or not so much?
Nicole, it's an open-toe shoe. I'm a marathon runner. You don't want to see mine.
Okay, you agree on that as well? Let's just end the show. Okay, Ben, talk about Amazon.
You know, actually, Don, I can't remember the last time this happened.
Liechtenstein run marathon.
3 on the big 3. So if we get a balloon drop here or something out of the ordinary occurs, that'll explain this. But
Rad, new high there.
Amazon, I do see some weakness, Nicole. Not only on the short term, we're looking at hourly candle charts here. Mostly, as you can see over, well, it occurred a few weeks ago, and that selling that we saw from 146 down to the lows a couple weeks ago, down around 123. And since then, we've been a bit more sideways, kind of rotating, pivoting around this 128 level. Very random as long as we're within this range, upper extreme 132, lower extreme again 123. But as long as we hold below 138, we're still in a bearish type pattern. We're seeing value form again at lower and lower levels. Let me show you what's going on here also on this more intermediate time frame, because you're
I could break out of this channel on the downside.
We talked about how Amazon had been
It looks something maybe like this,
but
if it did.
watching areas of value form at higher and higher levels. Look what happened. We kind of double topped here. We tried to break out 146, rolled back over through the pivot, and ultimately what's happened? Well, we've taken out 131. This is in a bit of a bearish pattern. This is part of the selling that we just looked at. Again, some of the recent weakness. You can see that range that we just identified, but hey, we've already gone below 131, so the bulls are really kind of hanging on to a thread if they're still thinking this thing's in a bull pattern from what I'm seeing here. Taking a look here, a little bit more longer term time frame here, very much in a very well-defined bottom left, I should say bottom top left to bottom right type pattern. Double tops on the left side of your screen up around 188 from, we're talking 2021 into the end of into the end of 2021, beginning of 2022. You can see lower highs coming into play, and then we just recently had another double top play out here as we honored that 150 level. Look at that. It's just sometimes incredible how this plays out. If we open up the door for weakness, or through 115 here, for the weakness, opening up the door to the lows that we saw in the beginning of this year. Nicole, not what the bulls want to see should we get back down to that lower level. This is another bearish pattern. I'm still waiting for the balloons. Unfortunately, we don't get that this time, Don.
All right, next time. You just got to keep working hard here, gentlemen. Keep showing up. Thank you both very much. Don Kaufman and Ben Lichtenstein, thank you for the big three today and all the time that we do this. Thank you. Coming up next, we're going to spotlight that huge energy merger that we spoke about at the top of the show. And this is ExxonMobil and Pioneer and what it means for the energy sector. Much more coming here on Trading 360. We will be right back.
this freaking guy. Two pair on the river. Super risky bet there. Have clubs. Okay. King got another two pair on the river. About to blow through two buy-ins. Like two hands. With a higher kicker? Really? Why was that guy calling? Just for that ace river. Wow. Stupid calls. Oh, so aggressive. %48% on top wire. Wow, that thing kept going. There you go, hit that resistance, 2270. These stocks really favor just day trading. Like, you could do 2-day on this thing, but yeah. After this move today, I would probably be selling at that resistance up there. this. Buy. I'd probably get some puts here if I could. Stock's at the low of the day though. Prefer to wait till the top of the channel. But he's gonna break out of that. Liquidity channel. Still holding my calls. Dumb of me. You're high there on RAD, 90 cents. It's completed its cup. If you get a gap fill for a handle. I'll sell some calls on it. My calls have so much time, it's not even up that much. Yeah, I can't do spreads. There's a huge spread on these rad calls. I don't even want to sell them. This guy's bluffing. Wait, they were both bluffing. Neither of them had a straight? Two pair? The heck? Ace hand. Oh my goodness.
The Schwab Network.
SPY new low there. Testing the bottom of that channel.
These companies are actually all performing quite well this year, and I think there's really a secular catalyst going on, especially when it comes down to onshoring of manufacturing. Now, Jabil Technologies is essentially an electronic design manufacturer. They basically manufacture systems, if you will, for manufacturing end products, electronics, things like medical devices, EVs, 5G, computing technologies, but they're also a company that has exposure to companies like Apple, for instance, which represents about 18% of their total sales. So they design electronic systems. And I think if you consider semiconductors as well, effectively, we're seeing a lot more onshoring, and that's creating a lot of demand for Jabil. But aside from that, if you look at today, there's an upgrade from Raymond James. They actually increased their price target quite a bit to 160 from 120, and they actually rated as a strong buy. And I think if you go back to last quarter's results from the standpoint of earnings, the company did post a quite nice increase in earnings per share, about 47% year over year, while sales were actually down about 6% year over year, where they actually missed earnings, but the stock moved higher because one of the things the company denoted was they spun off their electronic mobility business to BYD. They generated about $2.5 billion in cash, to which they actually initiated a share buyback of about 18% of the share float. So I think the company is going through some restructuring, including divestiture of their business. They are laying off some workers, but the stock keeps going higher, I suggest, because one, there's still demand for onshoring of U.S. manufacturing, which is really one of the reasons why I still suggest our economy is still productive. Our productive economy has improved this year, despite the financial restraint of higher interest rates, which really constrained the financial economy. But at the same time, I think if you look at the prospects for Jabil, not inclusive of just the share buyback, their earnings estimates are expected to grow into the double digits going into next year.
Understood.
Does everyone have a full house?
Optimism here as you're talking about this name. So how would you go about an example trade, JBL?
Oh my goodness.
Well, so last time we played
Pocket Jacks, what are you doing?
Long call vertical, we're going to do the same thing here. And I know it sounds kind of crazy to say we're going to go long going into this move, but if you look at the measured move of the move from April to August, it's about $30. So it looks like the price target based on measured moves around 145. So we're going to continue to play this trend. We're going to go out to December now, and we're going to buy the 135, 145 call spread. Now, altogether, this will cost you about $5 a share or $500 a contract. So looking at the price right now, 137.30, we're basically close to break even, which is 140, and the max profit of $5 is achieved at 145 by expiration in December. So you have more than 60 days for the stock to hit 145 to basically make $500 a contract.
All right. Thank you for that. Right now at 137, and I saw, as you mentioned, the Raymond James 160 target, but that's a longer outlook. Thank you for that. Appreciate it. George Tillis, always great on Disruptors every single day. Up next, our panel taking a look at today's inflation data. The PPI data coming in a little bit hotter than expected. Food, energy were some of the things that ticked higher. We have CPI.
Aloha, Maui. Morning. All right, Fidelity said 15 to 20 minutes. We'll see. Hey, it's working. Yippee. I'll see if I can get WeWork back at those prices it was at. Oh my goodness. Didn't mean to fold that. I had a good hand. I started. Full house. Gee. What's up, Cameron? I'm kind of bullish on it. I think there might be something there. Equity in a new company. I don't know if you've kept up with it at all, but he's interesting. These guys have awful hands. Where the heck you been, Cameron? Excuse me. Donut anything. Yeah, I'm probably more support and resistances. Liquidity sweep entries. I'm trying to think what that would be. I guess a bit of both. I see liquidity, and then once it busts through there through resistance, grab liquidity, and then it rallies. That specific phrase, though, I don't understand the technical trading jargon. There's a break of that liquidity zone. Very choppy though. 12 o'clock, wait, let's see, EU close, where was that? Back there. Suppose I could take the puts, it's just I don't like the risk reward, I don't like FOMC at 2 hours. Price action has been tapering also. Is that RSI divergence? Today's been nothing but a chop fest. Controlled selling. Why didn't I get to bet on the river? Or on the flop? Dude. Okay. More tapering at the bottom here. We can hold.
Sources up about 1% on news that Exxon is acquiring Pioneer. The Wall Street Journal first reported on this potential tie-up last week, and it's official. It's an all-stock transaction valued at about $59.5 billion, or $253 per share. That's about an 18% premium to Pioneer's closing price on October 5th, when that report first came out from the Journal. It's also the biggest deal we've seen this year.
That's a big deal.
Pioneer is trading
Kind of a
basically
big
at around
deal.
$240 right now, but including net debt, it's valued at approximately $64.5 billion. The board of directors of both companies have unanimously approved the transaction, but shareholders still Pioneer shareholders still need to approve. The transaction is expected to close in the first half of 2024, but merger actually combines Pioneer's 850,000 plus acres in the
Just more
Midland
people getting
Basin
desperate.
with Exxon's 570,000
Yeah, that'd be
acres
pretty
in
sad if they didn't get
Delaware's
anything out of
Midland
it.
Basin. They say it will create the
Yikes.
industry's leading high-quality, undeveloped
PacWest
U.S.
bank merger?
unconventional inventory position. Together, the
Yeah,
companies
PacWest
will
is
have
like
an
consolidated
estimated
tightly.
16 billion barrels of oil equivalent resource in the Permian. They said the transaction will double, or will allow Exxon's Permian production to double to more than 1.3 million barrels of oil equivalent a day. And CEO Darren Woods said the combined capabilities, no relation, I should say, that's the Exxon CEO, said the combined capabilities of our two companies will provide long-term value creation well in excess of what either company is capable of doing on a standalone basis. He called it a win-win for the U.S. and that increases U.S. energy security and benefits consumers. So not seeing it benefit Exxon stock today, as I said, off about 4.5% right now. Pioneer shares up about 1.3%, trading around 240. But Chevron, which of course is a rival of Exxon, under pressure today, off about actually about 3% right now. Although keep in mind, oil prices are continuing
All
to
right, see
tick
if we
lower right
bounce
now.
off the bottom of this channel.
Yeah, Caroline,
if
this
we do
is
start to
really a
taper.
Permian Basin story. And, you know, very quietly, Chevron's the #1 in Permian, ConocoPhillips is #2, and very quietly, Pioneer was the #3 producer in the Permian. So ExxonMobil to make this deal, pretty solid strategic deal for them. But Caroline, here's my question. The CEO of Pioneer tried to retire a couple
Hello
years
there,
ago
on
and
Spy.
basically couldn't. Now he's promising, based on his relationship with his wife, he said he's retiring from this. So the question is, how much of this is a good deal? How much of this is an exit strategy?
Well, I think that, you know, I heard him
Kramer.
say that he doesn't
Kramer's
plan
up
to
12.5.
sell any of his ExxonMobil shares, and I believe he's taking a board seat. So it sounds like he is exiting, but still, you know, showing his vote of confidence. It's not just a kind of throwing the towel in deal. I think the other big question is, will the deal actually happen? Of course, the Biden administration has challenged other big mergers like this, and we know that they've been critical of some of these oil companies in just hopes of bringing the higher oil prices down for consumers. So it'll be interesting to see if there's any antitrust scrutiny over the deal. I know it has about a $1.8 billion termination fee if the deal doesn't actually happen.
The Unity debacle. Just briefly, I don't really know what's going on with it at all.
Weigh in, and
What
it
happened?
seems like obviously Exxon CEO Darren Woods.
I think we heard on here,
win
actually.
for the U.S., but I just
And then I think
saw,
Donroe was talking
a
about it.
note from a Piper Sandler analyst saying it's a home run for Exxon, saying it fills the only identifiable question in its portfolio and firmly establishes itself as one of the most dominant players across nearly every business segment, and says the valuation or the price is reasonable. So, you know, we aren't seeing it actually trade at those levels right now.
All right,
but
picking up
so
a
far, the
starter
analyst
on
commentary
calls
has been pretty positive that I've seen
with a third string
on this
account.
deal. We'll have to see what
On the third
the
string.
Pioneer CEO wife actually has to say, maybe at a later time.
He said he is done at the end of the year.
Yes,
but they made a new board seat for him, so he'll still be around, I guess, maybe not as much. All right, thanks to Caroline Wood, senior markets correspondent here, breaking down the takeover news here today. But now let's bring in Alex Coffey, senior markets contributor here on the network. Alex, I wanted to get your take here because it seems like the reaction to the jobs data last Friday, the push into treasuries right now, we've got yields falling, that's lending some support. But at the same time today, like after the PPI data and overnight, bonds are really bid. Gold's bid. It makes me feel like people are repositioning into some safety plays right
diamonds?
now. Maybe bonds were oversold as
Higher
yields were
two-pair.
starting to rise. But do you look
No
at
diamonds.
it that way, or do you just think this is, hey, it's maybe that soft landing is coming back into play?
Well, I think it's a safety play, but I think it's also that inflation's just not the primary factor influencing markets anymore. And I felt that way for several months. However, I do think it's interesting to see the producer prices, you know, way above what was expected, because I think this is going to be the story of this earnings season.
So you had to step down because of it?
Industries and sectors and companies are going to be more effective in managing those costs and their ability to pass them on to consumers. Others,
Yeah,
like
I watched it.
airlines, are kind of saying they can't, and they're saying that and we heard this from American within the last few weeks. That
I know it's showed up on, I think, on my
their ability,
options screener
to basically earn money on the revenue that they're generating because they can't pass them on to consumers.
Yeah,
so
that game is over basically because they could for about 2 years.
It's margin compression.
Right.
So that's the story that I'm watching.
Oh,
and
AMC
which
up
sectors
5
are
1/4.
going to be best at managing it. So we've heard about efficiencies and cost cutting and things to deal with increasing costs, but we've also seen a tremendous amount of pass through to consumers. That's ultimately what consumer price inflation is. Well, we're at that crossroads now where the kind of feel of runaway inflation is not the fear anymore.
Mm-hmm.
The Fed seems to be rounding that kind of final turn, if not already has. And prices are still, a little bit volatile on the producer side, but there may not be the appetite to pay more from the consumer. It's going to be a very interesting earnings quarter.
Especially this quarter going into the holiday shopping season, Kevin. But at that same aspect of this, the other Fed mandate is, besides inflation, is the jobs data. It's still robust, Kevin. Yeah. It's still going to be a thorn in their side. I mean, wages aren't going to go down when you get prints like that from last Friday.
When you look at what yields have done over the last couple of days, remember they hit 4.8%. Now they're 4.5, 4.57. I mean, that's a big move in yields. So, and what does it have to do with? Is part of it geopolitical risks and problems in Israel and Gaza?
Take some props at the top of the channel.
But there's also part
I think
of
it's
this
up there.
that's probably this universal Fed speak new theme that we're done raising rates. Unless something dramatically changes, they're done. Raphael Bostic, he's
been dovish lately anyway.
Yes, but Lori Logan hasn't.
Yeah.
She flipped. I mean, all the comments we're getting, Christopher Waller today, more dovish. I mean, the consistency.
Oh, Bostic starts speaking at 12:15.
Transition to more dovish talk, especially basically eliminating.
He could be pretty pretty hawkish.
It's pretty remarkable, and I wonder, I'd love to be
might get some
behind
volatility
the
around
scenes
then,
and see
though.
what's happening, and if they're getting calls or the regions are speaking up.
Some major Congress people came out with a note to the Fed, basically saying, "Hey, you got to stop raising rates." Yeah, enough pain. Right.
Yeah, enough pain. So it's kind of interesting. But that being said, take all this information together, and the smooth landing is kind of it's real.
Yeah.
It's an actual thing happening right now. So we'll see. Everything could change tomorrow on a CPI number, right? Subject to change without notice.
Right.
But so far so good.
Yeah, and Alex, you mentioned earlier the earnings. I think that's going to be really huge as we unofficially open earnings over the next couple of days here with financials on Friday. Is that the main concern that the market should be worried about? That we're going to see a bunch of revisions down. I've already seen it. Like a lot of banks, price target cuts across the board today, with expectations going into this earnings season.
Deposit cash and trade within minutes.
They're going to miss, and they're going to guide lower.
So I think to understand this and why it's a risk, you have to look back in time. As we came into this year, there was this feeling of this bounce back in the U.S. economy. Well, it didn't really happen in the first half of the year. So in June, we were talking about how, it's going to be this second half rebound. That's really when it's going to be. And that's not really showing up either.
Took a pretty big position on that
starter.
Expectations
based off
called it a starter, but
I saw
that wasn't
that
like
the
a starter.
S&P 500's basically targeting that range is for like a 0.4% decline in earnings again. That'll be 4 straight quarters of declines. Yet what have we seen this year? We've seen the stock prices go higher.
Right.
So that's swelling of valuations. All the while, what did we just talk about? Interest rates have been going higher.
Yeah.
So as interest rates go higher, all else equal, logic would say that should actually make valuations go down because you have alternatives, you have other competition for capital. We've seen the opposite. So there's no earnings growth and there's higher yields. This is like the worst case scenario for valuation to continue to swell. You're paying up for the growth that isn't there for so many of these industries. When I look at this though, Tom, it's important to keep in mind that while maybe the worst fears of recession and that timetable haven't come to fruition, it's also not fair to say that the economy is like firing all cylinders and super robust. You don't have 4 straight quarters of declines in earnings if that is what happens. and call that a booming economy. That's just illogical.
Right. On the flip side of that, yeah, I mean, because Alex brings up a good point. I mean, earnings have been decreasing, and we've been led by, the Elite Eight or Magnificent Seven, however you want to call it, Kevin. But the Atlanta Fed GDP now just came out revised 5.1%. So the economy's still humming along. Right?
Yeah, that Atlanta Fed GDP now, that thing is all over the board. It's like a
All right, Bostic's gonna start talking.
I don't know what
roller
it is,
coaster.
frankly. I don't know what it is, frankly.
Might
but
see
it
some
moves,
candles.
Let's put it this way. It updates by the hour sometimes, it feels. But it's hard to all put this. We're digesting a lot of information right now. And there's a lot of uncertainty going on right now. I think the Middle East concerns me. What concerns me about the Middle East? Escalation.
Yeah.
I think, they're already getting more problems there. I don't want to get real specific about it because it's changing, but this is a headline-driven market right now. As we go into earnings, you got to be lean and agile moving in and out of these markets because there is a lot of news in a lot of ways. But that being said, rates going down, yields going lower, is significant for stocks.
Yeah, and Alex, when going into the Fed minutes this afternoon, are we expecting any surprises that could sway us? Because as Kevin mentioned, we've seen some of the
low there on
Fed
SPY.
members kind of flip a little bit, or at least maybe consolidate their ideas that they may be done. But Bowman was out today and saying they might
get
need
a bounce in this
further
channel.
hike. But I think the market's kind of taking that
Make
into
it back to the top of it.
factor that, hey, if they do hike again, it's probably going to be a quarter basis point, and that's it.
So I think that there actually is possibility for volatility in a very short-term time frame because we're going back in time to that Fed meeting in which when we left that Fed meeting, the feeling was they're going to raise another 25 basis points. Right. It is this hawkish kind of takeaway, yet they've sort of neutralized that through Fed speak since then. Well, this Fed speak since then isn't going to be included in the meeting minutes. So you might have this kind of counteracting force where you have this sort of pullback to the hawkish side, even though it's not the most recent information.
Right.
That's why I say it could be short-lived because I feel that the general feeling in the Fed is we have a healthy steepening of the yield curve. The long end is finally cooperating a little bit, and we might not have to do anything. Let's not mess this up. Because the biggest fear they have is policy mistake because how many soft landings have been projected and then not actually happened because the Fed keeps doing more and more and more, and that policy error kind of breaks the story down the end. So that's their biggest fear.
Could
it's really
be,
hard
Cameron.
to do. That's why the soft landing is not the most common of outcomes, and it's been one that's been predicted basically every time, and I think only landed maybe a couple times.
Yeah, and those lag effects come into play, I think, guys, more than anything, where you just don't know, right? In a couple months, things
we're
could
not
change.
tapering.
The
testing about this channel
policies
again.
and the higher
It
interest
sucks.
rates that we've had over the last 6 months or so, when do those fully take place? Consumer, that's going to be a question.
Alex said it best. The data coming out of the Fed minutes with all the Fed speak we've had since then is stale.
Yeah. Oh, definitely backward
My
looking at this
gosh.
point. All right, let's take a
Should've
quick
put 'em
break,
all
guys. When
in.
we come back, we're going to take a look at Delta Airlines. Travel demand remains elevated
That
according
sucks.
to TSA
Oh, new low
data,
there.
but the stock's
I just
fallen over 25%
flushed through the bottom of
over
that
the last
channel.
3
Dang.
months. Fast Markets coming right back.
This is a sucky setup for a trade, though. I mean, it's just not. Dang it! Just folded pocket kings. Yeah, this more aggressive selling channel just might be breaking it out of this range we've been in all day. We'll see. Not many good trades today at all. This one was it. AMC's up 5.5.
And you look, Delta, United, American, they're all look the same. So what does that tell you? They're going to move all the same. Delta comes out with earnings tomorrow. Watch all the airlines in this sector. They're all going to move together. But, you know, here's the good news. Ed Bastian is a pretty good delivery. He brings pretty positive tone. And they usually have good news.
Bostic speaking,
they have the
isn't
best
it?
margins in the industry also.
Exactly. So I don't know what he's going to say. I have no clue. But, boy, this stock has been beat up the last, month and a half here. So you look at the move from almost $50 down to $35. Yow.
Yeah.
But we warn on this show all the time, even in normal markets, airlines are volatile movers. Why? You bring up that word capacity, and they've all added capacity in the last quarter. So, can they keep the levels up
New high up there on the round.
with more capacity? Capacity is a bad
New
word.
low
in
on
the airline
SPY.
Yeah, and it doesn't seem like planes aren't full the last couple of times I've flown. But Alex, think about it. Oil was about $74 a barrel when Delta was hitting those 52-week highs. They're
Wait for a great setup.
About
Break on that
13.1%
upper
revenue
channel.
growth and $1.96 per share in EPS.
Neither of you even mentioned the new pilot contract either. That's going to lift the basically labor costs, or it's expected to, by almost 20% from last year. That's potentially going to cut into margins by almost 2%. So the story is real, right? We've seen this stock fall almost 30% in the last quarter off of its highs for the year. Like, it's not a secret why this has happened. They have a bunch of their input costs increasing, all the while one of their key competitors and really a great barometer of the space in American has said there's no demand for continued, or no more appetite for continued pass-through of these costs. So while maybe they don't come down if prices do start to moderate in other places, or you do see a reversion of crude oil in the future as they try to make it back at different times. The sentiment and the story is certainly a negative one right now for airlines as a whole. And so that's the science aspect of this. But when it comes to trading and investing, Tom, we talked about this a couple times in recent days. There's a bit of an art to it as well. And no better illustration of this than recently in Pepsi. The story was negative all across the board. The stock had gotten beaten down. There was stories that diet drugs are going to influence snacking, therefore no one's going to buy chips anymore, and so Pepsi has no chance. And so what does Pepsi come and do? They beat earnings and they raise their guidance, and the stock goes modestly higher. So while I think this is probably better compared to a company like Nike that has very public struggles at the moment, labor costs, product costs, are influencing the bottom line. It's led to the downside. You can still have crowded opinions, crowded trades, and things can be overdone. And so I looked at a neutral to bullish strategy, essentially just fading this negativity. Do I expect a massive snapback rally in Delta or any of the airlines? No. Do I even think that a moderation of the down move may be short-lived? Sure. But we're looking at a short-term trade around this event, just maybe looking for it's not as bad as it's expected, and that can be enough for the stock just to maintain its value, because we're looking at a neutral to bullish strategy with a break even below the current share price.
Yeah, and RSIs were down near the 20 level just about a week ago, about 33 now, so almost oversold on that. Option market's only pricing in about a $1.40 move either way in these shares, so give us the strikes here, Alex.
Yeah, what I'm looking at doing in this particular strategy is selling a put vertical in this Friday's expiration, so October 13th. The stock right now is just above 35.50. The very first out of the money call or out of the money put is the 35.50. This is as much a function of pricing as it is strike selection, and you kind of heard the thought process. I'm not necessarily looking for a move higher. I'm just not looking for a move lower with this strategy. If I'm able to collect around 33 cents for this, that'd be 1/3 the width of the strikes or thereabouts, and that's sort of a loose guideline to get that 2-to-1 risk-reward ratio that we often talk about. It'll bring the break-even down to 35.17, so you have a little bit of cushion if this report does lead to downside. The stock's a little bit lower today, so you're not buying into strength by any stretch of the imagination here, about 30% over the last quarter. But it's risk-defined as well. So if this thought process is just completely off base and the stock does plunge on earnings, you're not exposed beyond the $67 that would be associated with the risk in this strategy filled at 33 cents. So risk-defined, probabilistic.
New low there on SPY.
If you follow sort of the thought process that I'm laying out, it's one that would capitalize on that exact outcome.
Yeah, we got the example trade up here, October 13th. Weekly, selling the 35.5 strike put, buying the 34.5 strike put, neutral to bullish, $1 wide short put vertical, collecting roughly 33 cents. I think it's trading closer to 40 cents now. But if you collect 33 cents, it takes your break even. You can see there, 35.17 with $67 in risk per spread. Kevin, on this one, it's fairly aggressive, but it does take that bias that, hey, even if it's bad, this stock's already maybe sold off enough into the report where, hey, if it just consolidates here, maybe goes up a little bit, this is still a profitable trade.
We talk a lot about a short put vertical, 3 of the 4 scenarios
This
you
dude
do
has an
well.
ace, doesn't he?
Well, this one, it's really closer to 2 of the 4 scenarios you do well. But
The straight.
based on the movement in the stock, right, it's okay to inject an opinion into the trade. All the fundamentals remain the same, right? You're selling the put vertical. It's risk defined. It's collecting theta, but it's closer to at the money than an out of the money put vertical. So nothing changes. You'd rather have it unchanged or higher. That being said, it's only got a $100 margin. The risk is the difference.
A correction,
between whatever you sell it for
like
and
to the upside.
So that small level of margin means what? You gotta love the 40 cents you're collecting.
Just
although
we
you don't
broke
have to
below
love
the
it, but
channel,
you know
so
what I mean. It's a good
might start
level
flushing
based
here.
on the risk, but that means you could do more of them because it's only a $1 spread.
Just straight
but
out there.
airlines don't trade big premiums, so you have to adjust your strategy, whether the width or the strike selection, based on the stock you're trading. This one calls for moving that strike maybe a little closer to at the money, but make sure you understand the risk. Any down move, and you're going to be violating that strike.
I think an important note on this too, if I could. I mean, I
we
sent
bounce
you
from here.
this trade illustration an hour ago. The stock was trading at $36. It sold off 50 cents. If this is me, I'm
Ugly
probably
price action
shifting this
today,
down
though.
by 50 cents across the board
Just
and looking to collect somewhere
choppy
around 30
selling
cents again.
selling
To me,
channel.
That's when I'm pricing these things off of how much I can collect. If it starts getting up to 40 cents on a dollar,
Bulls
it's probably too
need more
close.
liquidity, I guess,
If it's at 20
after our
cents,
huge
probably
rally
not
last
enough.
couple
And
days.
so there's no perfect answer, and it's going to be different for each investor. But the reality of trading and investing is it's a function of timing. You get filled at something that goes 50 cents ago, and it moves down against you. Unfortunately, it's against you, and you're stuck with the position you have. You can consider a change, or you can just kind of go into that knowing that at the time you had 50 cents and now you don't.
Yep.
35.34 trading about 31 cents.
Yep.
Market's waiting for FOMC, it seems
stock
like.
has come back. Those are good reasonings behind timing in your positions, especially if you're doing an earnings type trade.
If you're trading these markets actively, these are the steps you go through every day, every hour almost, if you think about it.
Yep.
Stocks are moving.
Second guessing yourself, when do I do it? All those questions, for sure. All right, great look at that short put vertical, neutral to bullish in stance that Alex gave us. Remember, you got some assignment risk on that short 35.5 strike put if you do those strikes on that example. All right, we're going to take a quick break. Kevin and I are going to be coming back, and we're going to be joined by Landon Swan from Likefolio.
Really, to be safe, I want to wait for a break of this upper channel. Get calls, but looking for a spot to average in. Yeah, I don't like to scalp a whole lot. But yeah, there was a couple setups. My account was locked out, so I couldn't trade this long. I got into a bad one up here, and it's on a small trading account. I didn't close it and didn't stop myself out. So stuck in that one still. And then long again. And held through this for some reason. I should have closed out there, but that was on my second trading account. That's also a small one, so I didn't want to close that one out either. So now my third string, my bigger account that I trade with, that one usually saves the day. If there's any saving to do. But yeah, I wasn't able to trade during this time with my account, but I am now. New high there on Rad, 26%. It's $1. SPY will make up its mind. Probably by FOMC, if Bostic doesn't move it around. See a break on the top of that channel. Where's Bostic speaking? What in the world? He was doing that with a 9? Got lucky on the river. Jeez.
Advances in this. You don't think of pizza and technology at all, but they were one of the first ones to really develop their app. They're partnering with Microsoft now. You mentioned the Uber Eats thing. You know, they're creating efficiencies through this and AI capabilities going down the road. Maybe that helps costs and efficiencies going down the road here, but is that maybe the caveat that makes them maybe a little bit better than anybody in the space, and whether it's pizza or any other type of food that you can get delivered?
I think so. I mean, they completely turned around their company. You know, just mentally rewind 10 or 15 years. Domino's was a joke. I mean, they had some of the worst pizza, worst service. They were doing terrible. They had a massive comeback. Now they're one of, if not the leader. It's an amazing story. And a lot of it is done, you know, of course they had to reinvent their pizza, but then they also did a lot with technology like you're talking about. So they're obviously big on technology.
Add maybe the calls, we'll see.
Company, even if it's a pizza company, can benefit from technology and increasing efficiency. I mean,
break
if
this
you
resistance
are
up
able
here.
to cut costs through efficiency by 5 or 10%, that goes straight to the bottom line, and shareholders are going to see that and appreciate that. The price of the stock will just go up. So I do like that they're innovative and that they're leveraging technology. That's another reason that, you know, I mean, the data that we have says that they're leading the way, but just their attitude toward technology also gives me confidence that they're going to continue to innovate and get better. So again, if I've got to pick a pizza company, it's DPZ, but I might stay on the sidelines.
DPZ,
when
baby.
it comes to earnings score, this might be disappointing. We're actually a 0 exactly. So we have no bias one way or the other. If Ozempic and all that story is causing premiums to go up, maybe we could get in on some selling of premium in one way or the other.
This guy's like a bird or something.
A giant move out of this one based on the data that we're seeing right now.
All right, great stuff. Great data as always, Landon. Appreciate it.
Thanks, guys. Take care.
All right, that's Landon Swan, co-founder at Likefolio, breaking down the data. We have discussions in the newsroom here, Kevin, about the likes and dislikes. Who likes Domino's, who doesn't? I mean, we live in Chicago. There's a bunch of options.
You got my point exactly what I was going to start out with. You and I might not be the right people to be discussing Domino's because Chicago is such a regional, small business pizza town.
Right.
There are some bigger companies, but generally, you go to a neighborhood.
What if I had an ace? That was a nice move.
Right? Both downtown and in the suburbs, it's pretty significant. But that being said, you know, the ease of ordering Domino's and children, the younger your children are, the more they like Domino's. Yeah. Atlanta's right. They did change some of the recipes and improve the quality. So, and their use of technology is well documented. So, what does that mean? This stock has sold off significantly. It's bounced off its lows, but it's still down. Earnings tomorrow. Where do I think it's going? I have no idea where the stock is going. So could they report good news on this like PepsiCo did? Yes. Yeah. Could they admit more problems? Yes.
Yeah.
So I think in this case, if you're going to trade Domino's Pizza, you go with measuring the expected move, which is right around, it was about $19,
right.
almost $20 earlier today. Vol's actually come in, that means.
Right.
So what I did was, I did $20 wide in either direction, Tom, and I did a double calendar. And so be careful here because the prices are a little all over the board. Make sure you do proper price discovery on this. But it's trading between $1.80 and $2 and slightly over $2. But I did the 1 week, the 375 call calendar, the 335 put calendar. So think about it, $20 in either direction, $40 width between the strikes. This is just a double calendar, gives you the opportunity or a chance to be profitable in either direction.
All right, yeah, let's break this one down. Double calendar position. Going out to the October 20th monthly series here. So you've got 9 days till expiration. You buy the 375 call, 335 put. You purchase both of those. Both out of the money, and then you sell the near-term October 13th weekly options that expire in 2 days. Those same strikes, the 375 call, 335 put, paying a debit of roughly around $2. That is your risk, $200 per spread. Your break-evens, about $313 on the downside, about $404 on the upside. You got some assignment risk on those short options. But Kev, you make a good point about price discovery on a trade like this. 35 million shares outstanding. It's a $356 stock.
Yes.
That's something that you have to take into consideration.
Markets are a little wide. Make sure you're putting in limit orders that test where the liquidity is. And here's something you can use, Tom, real quick. Today's option stats, if you look there, it gives you the percentage of orders that trade in between the markets.
Right.
And when you see in between the markets, 71% of the calls, 65%, about 2/3 of the puts, trade in between the market. That tells you use price discovery. There's the data right there to tell you.
Yeah, and if you just look at that, you know, it might be a $1.80 debit on a trading platform, but you might not be able to pay $1.80. You might be able to pay $1.50. You might have to pay $2. So I think those are good points for our lesson here with this example trade. But you can see there from the apex of profitability, it's at or near either the 335 strike on the downside or up or near the 375 call strike on this. But you've got a nice wide range where you can still remain profitable on this. But you do have some assignment risk, as I mentioned, into those short options, into expiration on Friday's close in 2 days. All right, that's going to wrap up this segment, Kev. But when we come back, we're going to take a look at Adobe, the cloud stock company. Had their analyst day yesterday.
We're back down
over
to VWAP.
60% so far in
Brad's still hanging out up there,
2023.
25%.
So having a good year there. We'll talk about
Joan
Adobe
now
when we come back.
20%. We're getting down to the end of this little wedge here. Let's see break out before too long. Very choppy day. Yeah.
Yep, definitely, Ben. We'll continue to watch those yields also. Appreciate it. That's Ben Lichtenstein, host of The Future Show, breaking down markets for us. But now let's bring in George Tillis, senior markets correspondent here. George, we're talking Adobe, having a nice day, up over 3% today, up about 63% so far this year. I mean, tell us, is this warranted? Because they had their analyst day, and I read one of the analyst notes, and they said, it was a good analyst day, but everything's kind of been pushed into 2024, 2025 for a lot of their adaptations into AI.
Yeah, I think if you look at what's going on, obviously the stock is on the move today based upon the analyst day that they had yesterday, Investor Day, and a lot of the analysts are really bullish on the stock after the fact. I think, if you look at, Adobe, and you think of artificial intelligence, I look at a business that's extremely profitable, but has a lot of growth associated with artificial intelligence. AI from the standpoint of moving us from the information age to the knowledge age is one thing, but you also have to think about the adaptations for artificial intelligence to create visual media, and that's effectively where Adobe's Firefly AI, as well as their Creative Cloud software suite, is integrated very well together. It comes down to enhancing productivity versus having a graphic artist that is trained to create visual effects and of course media content. From that standpoint, you can actually have artificial intelligence do that, which is very meaningful, I think, from a productivity standpoint. And I think Adobe is really locked into this ecosystem. They have, of course, their software suite, which includes digital media and creative publishing. Their Document Cloud is still their core business, but they've been moving into e-commerce and marketing over the past few years as well. And the stock had come down tremendously alongside with the rest of the market in the bear market that we had back in 2022, but it's making a nice comeback here. With some of the analysts are very bullish. If you look at RBC, for instance, Piper Sandler, Stifel, they've all got plus $600 price targets higher after the analyst day yesterday, where the company is really denoting some improvements in integrating their software suite with artificial intelligence. And I have to say, we focus too much on some of the top-notch players in AI, like NVIDIA, for instance, and maybe some of the other non-profitable companies like C3 AI. But Adobe is really profitable, but also is a fringe player in the AI space, considering that artificial intelligence is not about knowledge; it's about creating visual results from text. And I think if you consider the Adobe software suite, they're very much in line with what's happening in the secular trend.
You mentioned the Firefly feature. That's their AI feature, and that's got people excited about Adobe. But this company has organic growth in their other segments without AI, right? This is still a pretty healthy, solid, organically growing company even before AI starts adding to all these pieces, right?
Yeah, exactly, Kevin. If you just consider, for instance, their Document Cloud, their creative publishing business. These are core businesses which are now reversing back to the upside after they did pull back in 2022. But if you just look at the next year's guidance for both sales and earnings, they're expecting 12% sales growth, which is actually below its 5-year average, but earnings growth is expected to be about 13 to 14%. And one would say, or maybe some would say, as a group,
a little head and shoulders there.
For earnings is still relatively conservative. Considering, I suggest maybe the ecosystem around artificial intelligence hasn't factored in the price just yet. As Tom alluded to, they're looking at really implementing AI
of the low at least.
So moving into 2025 versus next year per se. But overall, this is a very extremely profitable business, which hasn't hit its 52-week highs just yet.
All right, George, thanks for the rundown here on Adobe post-analyst day. Getting a nice little pop here. That's George Tillis, senior markets correspondent here, breaking that down for us. But so, Kevin, I looked at this, just from a trading aspect when I came up with an example trade. You look at this stock, it's off of those, those highs that we saw just about a month ago, but now back above its 50-day moving average. It's moving higher today. So I looked at a strategy that takes advantage of maybe if it continues to go higher, you're still going to be profitable. But if it does pull back a little bit towards that 50-day moving average, which might be support, or maybe it tracks back there because the overall market falls, I looked at a strategy that takes advantage of that, where you get a little kicker. So it's a neutral to bullish type strategy, Kev, but in the butterfly family. So let's break down the strikes. Out in the November monthly cycle, you're not going to capture earnings event on this one. But buying one of the 530 strike puts on the November 17th monthly options, buy one of the 530 puts, sell two of the 525 puts, and then buy one of the 500
new low there on SPY.
You're collecting a credit of roughly about $4. So that's $400 credit. Now that's what you can make above that 530 strike on this one. But Kev, it takes your break even if you're collecting about a $4 credit. Probably trading closer to $370 credit right now. But taking in that credit, you can see here from the risk profile, it takes your break even all the way down to $516. And with that little kicker at that short 525 strike where you're short two options, but anything above 530, you get to keep that credit you collected. Now, your risk on it, because you're basically buying a $5 wide put vertical and selling something that's a little bit wider, $25 wide. You got $1,600 in risk if it goes below that 500 strike.
Yeah, this is a put butterfly, but it's got a long delta, and you do better on the upside than a big downside move. Why? Well, because you've got a $5 put vertical and then a $25 put vertical. So what does that mean? That means there's a little more risk on the downside is what you have to deal with.
Right.
The expected move out to November is about $44.
All right, I'll add to the puts or the calls on the break of this.
So understand what that takes you. But
Break of this
if
wedge to the
your thing is
upside.
slightly bearish to bullish, this fits that strategy, right? Because this would max out right at 525, which is $24, about halfway in the expected move down from here.
Yeah, and I like that you bring that up, those anticipated moves that the option market's pricing in. Now, those are dynamic. They move on a second-by-second basis based on where the stock is, what the implied volatility is doing. So you've got to take that into consideration. But it's a good guide that the trading platform gives you. If you're thinking, okay, I've got how many days? 37 days until expiration. What's the option market pricing right now as far as implied moves?
It helps you with strike selection. It helps you understand, but that's a moving number. Like you said, if vol goes up or down, that number's going to move.
Yep. I think the key thing is your break-even's all the way down at 516. So even if it does go down, you get that little kicker at or near that short strike also. All right, Kev, that's going to do it for you and I today here on Fast Market. But stick around right here on the Schwab Network. Next Gen Investing's coming up.
Next Gen I. o'clock. Ready to rally. Yep. All right, I added to my calls. I did it. Looks like you up. 222 Oma. Sounds a little tribal. More sevens out there.
A little bit uncertain, a little bit jittery here. Don't make the most of this 4-point down move, 3.25 points in the S&Ps. It is notable to see the NASDAQ in green, but there is 3 hours left in today's session. There is plenty of time for these numbers to change dramatically.
And plenty of time for finally Birkenstock to make its public debut as we are awaiting its actual final first trade on the New York Stock Exchange today. We have a very IPO focused show today to kick things off, but as always, we'll be starting things off here with our upvote and downvote segment. Following that, we will chart and trade those upvotes.
It was good morning.
Our discussion today is all things CSX, as it did see some analysts
in Nigeria
today making a modest move to the upside,
Igbo.
and then we will be looking at all things Stellantis, as it is a bright spot in these markets, perhaps evading some of the negativity and the pressure that's been facing all things the UAW strike, and of course Stellantis is one of those big 3 Detroit auto players, Alex.
Yeah, parent company of Jeep, Chrysler, Dodge, those vehicles. So whenever we're talking Ford and GM, it always feels like those are being left out, but they just go by Stellantis on the publicly traded market. So looking forward to that combo under 30. CSX Corp, not a name I would typically associate with the next generation, maybe a former generation in terms of railways and trains and things like that, but that'll be a fun combo for FOMO, as that's such an important industry, the transports in particular. But as we do, let's do upvote, downvote, a little bit more of a focus on sort of recently public companies. And in the case of Birkenstock, a soon-to-be publicly traded company. Let's start there. They're not endorsements, they're not recommendations, but having a little fun here on
Still
IPO
down
day
his
for
calls,
Birkenstock. What is sort of the setup as we await that first trade?
So the setup is, this stock is being priced at the higher end of its range.
1
It's
o'clock
projecting to go public around $46 a share. That puts its valuation at around $9 billion. But what's interesting about this company is, although it's going public today, so it's new to the publicly traded market.
Is that from
It's not a new
Bostic?
company, as I believe it's been pretty well documented now. This company was first founded back in 1774, which I did look up the original Birkenstocks. They look quite different than what we know and love today, but still a company that stood the test of time. And as we know, that September has been a really good month for the debuts in this market, and the outlook for October does remain strong. Last month, just 3 names, those being Arm,
I like that
Instacart,
candle.
and Klaviyo, did raise around $6.5 billion of the $7.2 billion that was raised overall.
That's a little
in
shake me out
IPOs.
candle, I bet.
Take into consideration, though, that the first half of 2023, we saw security placements barely reach $14 billion. So the fact that just $6.5 billion occurred last month shows that the IPO
These guys are
market
calling?
is heating up. So when it comes to the German shoemaker, we're still awaiting that actual first trade, like I said, but lots of enthusiasm and anticipation.
Please don't have two pair.
awaiting a
Please don't
company
have
that is
two pair.
So well known, and actually interesting
One of these guys
fact
have, like,
that they
pocket
attributed
eights or
a
something.
recent
Pocket
interest
aces?
in surge in sales to the Barbie movie, which if you've seen it, you know that Birkenstocks do make a pretty nice cameo.
So we're watching for that first trade. The latest indicated
It raised
opening
pre-flop.
price
That's pretty.
is tracking for
That's
at
pretty
least
good.
11% below the $46 IPO price
I think
that
I
was
have.
set up. So initial reports not showing excitement the same way that we have in names like Instacart or Arm, which we're going to get to in a little bit. So that is the story of the moment. About 45 minutes ago, tracking somewhere between 39 and 41. So we'll see if the latest update, when there is a trade, if there is one, we'll make sure that we go through that. But next on the list is Arm. This is a name that really, I think, carried the flag of for IPOs so far this year. This was the most anticipated one. This is a name that is in a cutting-edge industry of semiconductors, ties to artificial intelligence, just seems to be very much in focus for so many reasons.
Yeah, so this was by far the largest IPO on Wall Street this year. The microprocessor company has a long history in the field of AI. It did raise around $5.3 billion in September alone. Its owner, which is
23% on
SoftBank,
Joan.
did take only 10% of its overall capital public, and the Japanese investment holding company did buy Arm back in 2016 for around $32 billion. Later tried to sell it to, of course, NVIDIA, but regulatory requirements did derail that operation. They did go public at a price of $51 a share. Its shares are now trading just below 55 at around 54.63. This name, though, already has a decent amount of analysts covering it, considering it did just go public about a month ago. September 14th was its IPO date. 21 analysts, 14 buys, 6 holds, and 1 sell, but the average price target still stands around $63, which implies about 15% upside from where we're currently trading.
And I did see just as recently, I believe, as yesterday, Daiwa, an analyst there, did have that exact price target of 63 with a buy rating. So a name that I think has sort of tempered optimism around it. It came in, it was extremely well received, but it has slowly but surely kind of eased its way back towards that IPO price. A name that is like forever linked to NVIDIA because of those deals that didn't end up making it through. But certainly a key player in semiconductors going forward.
Absolutely. And so our next name today now is Kava Group, which this name did go public this year, although it feels like a distant thought because it was not one of these key September names. It went public back in June, actually. But today, with its own analyst-specific news, Morgan Stanley actually upgraded
Getting
Kava
wrecked on
to
this table
overweight from
for
equal
hours.
weight, while also giving a price target of around $41
Gonna
a
start
share. That
punting
was
a little bit.
reduced from 45. But the analyst says that consumer softness has been amply priced
blame this
in.
on Fidelity.
Shares off about 35% since mid-July.
King
The
10.
firm has
Good
more
job.
confidence now in Kava's catalyst path and near-term estimates, as well as its long-term fundamental growth story, saying that the small early lockup expiration in September, presumably some of these IPO offering holders selling, as well as higher short interest, all of these considerations have affected Kava, but the pressure is now lessening. The firm says that Kava has better traffic trends than several of its peers. We do know they have some pretty substantial growth plans over the next several years to expand their restaurant offer. Would love for it to expand into the
Okay,
Midwest
Queens.
and Chicagoland area.
Oh,
But
it's
this name
glorious.
does have an average price target of around $46. That also
This is a
implies
great table for
some
me.
pretty nice upside considering we're trading just below $32 a share here. And again, went public back on June 15th.
I think Mediterranean Chipotle when I think of Kava, and as you said, we don't have them in our area, at least I haven't encountered any, and so certainly one that has a lot of fans and one that is a popular fast casual restaurant, but not serving
Diamonds are
the
forever.
environment that I live in. So I have no opinion on the food, but I can tell you from the B-roll, it looks pretty tasty.
It does. I will say that every time we talk about it, I want it to come here because I want to try it and have a sample myself. But our last name today is one that I'm all too familiar with. That is Instacart. Now, Instacart did go public on public, went public back on
I got the
September
all-in
19th.
guys
They
going
do have
now.
earnings on October 29th after the closing bell. So that's a future date to look forward to here. Now, this debut on the NASDAQ did also spur some pretty decent interest, raising about $660 million, and an IPO that valued the company at around $10 billion. Their initial price was $30 a share, now trading at around $25 a share roughly. During the pandemic, though, when so many of these delivery services did boom, it was valued as high as $39 billion. Recently actually announced several partnerships that I found so interesting, one with Sinai Solutions to support patients after hospital healthcare, agreed to a deal to offer some co-branded Medicare Advantage plans with Instacart. Unlikely deal, but nonetheless one that it seems like Instacart is pushing more into the medical space to offer some of these pre-established deals with patients in care, outpatients, inpatients. From what I could tell,
End of these
Alex,
calls.
this name though, of the 5 analysts covering it, all 5 do have hold ratings. Average price target is $30 a share. So all of these names have seen some weakness, and I think that could be attributed to the overall market. But again, not unusual to see the volatility that follows a lot of these public debuts.
Yeah, this one not as well received. A lot of optimism on the very first day. Good old Maple Bear, of course, doing business as Instacart as we know it. Cart being the ticker. Didn't hold on to that level though. So breaking through that IPO
Like this
price
little
is
inverse head
usually
and shoulder
not
setting up.
a good sign. Usually that's sort of the benchmark. Are you
Pair of
above that
lows.
initial price? Are you below it? Well, right now it's below
Did break
it.
out of
So,
that wedge. It's just
really, I would say,
hasn't
bringing
done
down
much yet
confidence,
with it.
but all things considered, not way below it. And the market itself has been under a little bit of pressure the last month.
And especially, I think an interesting time for the company to go public because it was so past its boom. Not to say that there's not a place for it in this market, but we just saw such interest in it during the pandemic. That's when I used Instacart. It's not cheap. I will say it's amazing, the fact that you can have these bulk deliveries to your front door, but it's not cheap. So we'll be diving more into our votes today. Those names just have a little bit more trading activity to look at from a chart perspective, that being Instacart as well as Kava Group. We'll also be looking at some example trades in both of those names. Stick around. Next Gen Investing. We'll be right back.
You don't have a full house, do you? Oh, he had nothing. Off the straight. That WeWork consolidation up there, it's glorious. Got that W formation. Winning.
few months at this point. So walk us through what you're seeing.
You know, we're going to flex our technical analysis muscles a little bit here
Flex
today by
it.
doing some more intraday charts. And that's one of the things about technical analysis that I think is really useful, is that it applies independently of time frames. You can look for the same types of trend lines and patterns and candle patterns and what have you using the same concepts here. So let's take a look at a 4-hour chart of Kava Group since it started trading here. We can see that we've had some definite swings here. We topped out around 58.10 was our high that we reached. Since then, trending downward here. You can see this white dashed line here going across the highs, and we recently broke beyond it to the upside here. So we're having a bit of a push to the upside here. Now, granted, we did hit our lows near 29, so we've had a substantial decline in this name since those highs here, but perhaps a little bit of a bright point here in that we broke through this trend line. I also chose to include simple moving averages on our chart. If you watch our segment, you'll know we typically include 2163, 252-day exponential
Why are you
moving
still
averages.
playing it?
I'm falling back
Disguised
on the simple moving averages
trips.
today because we don't have enough data to go off of those longer term ones here. So you can see that's why, for example, our 200-day SMA begins right here. Once we have 200 periods of data, that's when it starts being drawn on the chart here. You can see here, we're crossing above our 50-period simple moving average. The 50-period simple moving average is starting to turn upward from a downward slope here. So the trend is starting to improve. In the longer term, we're still trending down though here. That kind of matches up with our overall read on the chart based on our trend here, but definitely something to consider here. Now, we can also try to extrapolate some of these key price levels as well here. You can see that we had a substantial decline once we broke through the 37 level. That's about where we found some lows here and here, kind of a double bottom type price pattern there. So that's the kind of thing that can be useful too. Now, you shouldn't expect it to stop on a dime in general, especially when you're using intraday charts here. It's a little more fuzzy. There's a little more give in these support and resistance areas, but this could be a good general area to watch, this 37 level, this red dashed line, Jenny.
Okay, so as far as momentum goes, again, I know we have less price to go off, but flexing our technical analysis muscles, as you said, what are you watching as far as RSI?
Well, we don't have a ton of data, but we do have enough to use the RSI on a daily chart here. And I thought it was pretty interesting because we found one of the main things you can use RSI for is to look for divergence here. Look here, we made a close here and then a slightly lower close there. It's maybe a little hard to see, but we did make a lower close. RSI, on the other hand, was trending upward. We made a higher close on the RSI. So that's what we call bullish divergence, a mismatch between momentum and price action here. This was a little complicated by the fact that the RSI was crossing into the oversold area. So that's a sign of weakness. Bullish divergence is a sign of strength. We have these two kind of counter opposed ideas there. However, it did seem to start playing out to the upside. RSI crossed out of the oversold area. That's a bullish signal. We are moving upward. We're making higher closes here. We broke beyond our trend line. So something interesting to keep an eye on, especially if we start to get beyond this 50 midline on the RSI. That's what separates bearish momentum from bullish momentum. That would be what I think the bulls would really want to see, would be a push above that area and into some new price territory here that we haven't hit for a little while.
So now, as far as some key support and resistance, I was noticing, at least on my chart, I couldn't even get the 50-day or 200-day moving average. Excuse me. Yeah, yours looks a little bit better than mine did. I think I was on the wrong time frame. But what are you watching? Because it's difficult when you just don't, again, have this historical price to go off of.
Yeah, that's a great point. You know, that's why I chose to include, you know, this more intraday time frame, so we could at least have some kind of moving average to use to assess the trend. Now, I don't really think I would want to use them as support and resistance in this case. I'd want to use the daily ones once they start taking effect here. But at least that helped us kind of establish that the trend is starting to improve a little bit. The longer term trend is still down, but the shorter term trend is starting to maybe turn a corner here. Now, the real thing that I think would be helpful on a chart like this, an intraday chart, is volume profile. This shows the most heavily traded areas of price here. You can see there's a bit of a spike around 31. That's an area where we saw some consolidation here. So look for that to be an area of support or resistance. In this case, it would be a supportive area that we'd be perhaps expecting a little bit of congestion in. Further to the upside, 36.50 50 or so, we have another node pretty close to 37, the area I highlighted earlier, the point where price started to bottom out and actually also topped out right there as well. But the most important one, volume profile point of control, this thick red line on the chart here, that's the area of heaviest trading. The price level of heaviest trading comes in around 42.36. So that suggests to me that perhaps there's some people who are underwater on this IPO.
If you get an inverse head and shoulders here,
been doing here.
test
and
on
that's
this
kind
left
of the
shoulder.
reason why these areas can be support and resistance. Think about it. If you were someone who was expecting a bounce right about here, and you started to put on some trades here, you're underwater now, you'd be looking to liquidate if it gets back up to that level to break even here. So that's why we try to pay attention to these volume nodes. So a couple areas to consider there.
Yeah, and I think that's sort of the added risk about, obviously trading or investing heavily in some of these companies that are just new. We don't have the historical data that we do for so many others. But now when trading this name, now we have had a few months. I mean, this name went public back in June. It's not necessarily brand new. Like some of the other names we were discussing, Alex, walk us through a more neutral to bullish leaning examples trade, just given the recent weakness, obviously.
Yeah, the volatility levels are quite high. The earnings is slated for the week of the November monthly expiration. So I looked at the week prior to that, which is the November 10th expiration. And this strike selection was a function of two things. One, having a break even near the all-time lows in the stock. And two, a function of the price of the spread itself. And so what we looked at here was going to November 10th, 29.5.
Back to the lows. There's a new low on it. Jeez.
And we can collect 30 cents on the dollar.
Bears building liquidity.
Sort of in line with our loose guidelines of 30 cents on a dollar.
It's crazy.
So we got $30 in max profit, $70 in max loss. 29.20 is the break even. The all-time low in the stock is just over 29, so we're in that ballpark of looking at the all-time low of the stock and the break even relatively lining up if we look at that as a potential level of support. And so if you look at the stock, of course, one thing that really should stick out is $30, $70 is a smaller trade. So another way to look at volatility and look at sort of the risks associated with some of these different names is just to use a strategy that controls that risk and brings that total capital at exposed down. So $30 and $70, Jenny, this is on the smaller side of some of our trade illustrations. But certainly,
Bostic started at
applies, be this,
a lot of people today.
300 and 700 or 30 and 70.
Bostic started at 12.15.
Have seen some volatility as of late.
Waller was at 10.15.
The growth plan
Bowman
that it laid out
was this morning at 4.15 in the morning.
You could see some opportunity for upside from here.
Collins is at 4.30.
The Bulls are hoping. Now to shift gears here though and look at Instacart, which is considerably smaller than it was back in 2021 at its peak, but has also been met with some pressure. Rick, walk us through what you're seeing. This name is about a month old now to the publicly trading sphere.
Right, we have even less data to work with here, but that's not going to stop us because we can still use our same principles of technical analysis here. Check out this trend line. We can see after we had the initial big drop after the IPO opened up here, after trading opened up on this name, we can see that forming off of that high, we can draw a line going across the peaks. And that's really what you do with trend lines. You draw going across the peaks in a downtrend, going across the troughs in an uptrend here. So we lost I believe about almost 50% of our value in this name from the highs to the lows. So pretty rough price action there. Once again, I chose to include a 50-period SMA and a 200-period SMA. And this is a 1-hour chart. Our last stock, we were looking at 4-hour charts. This is a 1-hour chart here. So this is the past, using 200 of the past periods, past 1-hour periods for our purple line, 50 of the past 1-hour periods for our blue line here. So you can see we don't have a lot of data here, so our 200-day SMA is this kind of little line floating above here around the $29 marker, so 28.28 or so. And we can see, assessing the trend using these two moving averages, they still give us an idea of which way things are going in the broader picture. The intraday price action can be choppy. It can kind of be all over the place sometimes, so it can be helpful to kind of smooth things out. Even if it's not a totally conventional moving average, it can still help give us an idea of where things are going. Right now, things are still trending downward. We've got our downward trend line. Our two moving averages are trending downward. Price is also slipping below our 50-period SMA here. So where does that put us then? Well, the next area to watch, perhaps our lows near 23.36. That might be the area to watch for some support.
So now, as far as some of the overall price momentum we're watching here in Instacart, what are you seeing? Because again, I think it's difficult to look at a name that's only been trading for about, less than 30 days at this point.
It is, and that's one of the things about RSI. You need 14 days of data. That's how it's calculated. It looks at the past, 14 trading days here. So this is a little less helpful, I think, using the RSI in an intraday chart, because it includes the extended hours of trading, times when there's very low volumes, very kind of unusual price action that doesn't really happen the same way as during normal trading hours here. But we can still get some good information from this, I would say. So think of the overall trend right now. We're trending downward. We've got a pronounced downtrend here. RSI, if you are slipping into the oversold area while the prevailing trend is down, probably a sign of further weakness. And that's how it's played out many times here. We can see, for example, this area, we saw falling prices. It's a little skewed here. It's a little thrown off here because we had such a high value in the beginning of our chart here. It's a little hard to see the declines here, but happened again here and there again too. So if you are hitting the
all this liquidity being built,
area
it's going to rip when it does.
Prevailing downtrend, though, that could be a sign that things are getting stretched a little thin. And that's how it played out that time as well. We can see here that we hit some highs around 2760. That's about where we topped out the second time. That's about where RSI started bouncing back and forth around that overbought area near 70. We eventually had our decline. Now we're finding ourselves back below that 50 dividing line here between bearish and bullish momentum, back more toward the bearish side. So kind of looking like momentum is more toward the downside. But really, you want to try to use the daily chart on RSI whenever you can, but this at least tells us something.
Right. I mean, I don't think it helps that we're seeing a 6% move to the downside just on today's trading session, only fueling the bear case as of late. But now, as far as some key price levels you're keeping on your radar here, we do have this name that has earnings within the next month. So we have that to look forward to, but again, relatively new here.
Yeah, and once again, volume profile can be helpful here because it shows the areas where people were showing conviction, where people were willing to put on some trades, willing to do their positions at these price levels here. So we can see around 25, there was a node here. That's about where we are now. So for a potential congestion area, we're actually slipping below to the downside since we've been doing this segment here. So that's interesting to watch. If we keep falling lower, like I said, the all-time lows, given our 2-week time span or whatever, 2336 is a point to watch here. To the upside, like I said, 2760, some old highs. Once again, highs there. That's a point to watch. And our volume profile point of control, the area of heaviest trading, you can see I kind of did this shaded box to show what price action is encompassed by it. It's right around 30.20. So you can see that that's an area where we spend a lot of time. That's an area where a lot of people were putting on trades here. So that could be a significant resistance point if we can get our act together and start moving upward again in this name.
You ever cover some of the 14% decline we saw over the past 2 weeks? I know these were difficult charts because just, again, not a ton of data on these names, but really great breakdown on some of the newest names in the public markets. Rick Ducat, our chart master. So now in trading this name, Alex, say you were looking to capture some potential upside over Instacart in the next month. You were looking at a bullish example trade, Maple Bear, what have you. Instacart will be to me, even though I know that's not technically the holding company's name, but walk us through.
Missed the street.
Well, one thing
always
I think
when
is
I run out of
important to
time.
note is it's probably not a coincidence that volume point of control and area of heaviest trading was right around the public debut price. So it's in that kind of 30 to 31 range where was the initial price. And so keep that in mind. But for a trader who's looking for a bounce back in this name, maybe a strategy to consider would be something like a call debit spread.
I got the flood. Wow.
We looked at in Kava Group, we have earnings that are in the November monthly cycle. We went to November 10th, buying the 25, 26. It's a $1 wide spread. What do we know about debit spreads? We like to structure it so the risk and reward are equal. So 50 and 50 for that 50-cent debit. Break even, simply add that to the long strike, you get 25.50. Same risk profile shape, elongated Z, just this time the break even is right in the middle and it's pretty close to the current share price. So speculative trade looking for a bounce back in the stock, but you don't need much, just above 26 for max profit.
And again, they do have earnings on October 27th, so we have that catalyst to look forward to, and this obviously extends out past that day. Instacart has been seeing some weakness today. Hopefully can see some upside after a 6% move to the downside just in today's session, like I mentioned. But that'll do it for this segment. Now coming up next, it's time for FOMO. We are looking at CSX, which is not always the most FOMO-esque name, but today seeing some analysts love and perhaps some stability in the overall market's volatility. We'll discuss that and more with rail exposure coming up next.
Being down to the utter depths of this wedge. SPY has just been shopping, waiting for FOMC, I think. Ugly. Maybe there was something off a little bit when we broke that channel, and then it just kind of did this, and then looked like more liquidity being built. I don't know, just the way the price action was. Yeah, look where the volume poured in. Selling. No reversals yet. $37 on top, 23 on Joan. You work 15 now. Brad down. Looks like it's gonna fill that gap at 9. Up 9%.
I think it does bring them credibility in terms of negotiations with the UAW. As a company themselves, we know that GM and Ford are facing some other challenges alongside Stellantis because of the strikes. But I think it's offering sort of a compromise, the $3.2 billion investment alongside Samsung for investing in an EV battery manufacturing plant in Indiana. I think it's a good thing. I think it shows that Stellantis is willing to work with the UAW to bring more jobs, just maybe in a different capacity, making electric vehicle batteries versus perhaps transmissions or engines in certain plants. I think if you just consider Stellantis as a company, one, you mentioned the American brands, which are very popular, like Jeep and Dodge and, of course, Chrysler. They don't necessarily have a better product than Ford and GM, but their stock price performance in the last year has been actually
this much
phenomenal.
exposure
It's
come
over
into it.
60% higher compared to the other two U.S. auto manufacturers, which are flat to slightly down on a one-year basis. And I think it really speaks to the diversification of the products that Stellantis has. If you look at Fiat, Maserati, which is a luxury sports brand, Peugeot, Opel and Citroën, these are brands in France which are very popular.
Peugeot.
They've got global diversification, and I think that's helped insulate this particular company from
Opel.
the UAW strikes,
Opel?
which
Apple?
again, from the standpoint of impact, has actually fared quite well considering the bigger impacts that Ford and GM have faced.
George, when you look at this company and Stellantis and make the comparison to GM or Ford, which I think is likely the most comparable to, at least that's the feeling here in the U.S. We sort of think of the Chrysler, Jeep, Dodge, and then we think of GM, we think of Ford as like the primary three manufacturers. This is the most international. This is what you were alluding to of the three. I'm seeing less than half of the revenues tied to the U.S. Ford, for context, last year was 2/3 of its revenue in the United States. And GM is 82% last year of its revenue in the U.S. How much is the international aspect of this company a differentiator?
I think it's huge. I think one of the challenges those other two, Ford and GM, is they're actually utilized in major fleets, which include things like public utilities and governments, rental car fleets, more so than Stellantis is. I think that's, again, creating a little bit more exposure for the U.S. automakers in the United States. I think Stellantis' exposure in the United States is actually good. It's not very large as a percentage of total revenues. And the brands, for instance, like Jeep, are extremely popular. And by the way, prices across the board for all of these auto manufacturers have been extremely high. So that might present a challenge for the other two, GM and Ford, because, again, their concentration risk in the United States is quite large. But at the same time, the commercial vehicle fleet that Stellantis has internationally is quite robust. And I will say this, outside of, revenues, sales or geographic diversification, just look at the financials. If you look at Stellantis,
All right, we're looking listen to Stock Market Live for the
the other
FOMC.
two automakers are around 10%, so that's double. And net income, this is where actually there's a huge difference. 10% net income margin for Stellantis, Ford at 2.5%, and General Motors at 6%. I mean, it's a much better company from a financial standpoint, just based on those metrics.
Yeah, I think really well put, George.
Well,
and obviously seeing
to
a
make
nice
sure
move
that
higher today.
Americans
It's
held
amazing to me,
hostage,
actually, the
have
Fed.
a path home and to be safe with their families. So we're keeping the to Mary's question. Obviously, we're casting the wide net. We're also keeping the options wide open right now, as we get more information. But we just don't have enough granularity to be able to fine tune those options.
Has the president spoken to any of those unaccounted for, or any of those Americans dead?
I'm not. I know that the State Department has been in touch with most of the families.
All right, 5 minutes.
Those that we know have been killed. I don't know if they've talked to all of them. I have no conversations from the White House to speak to.
Thank you.
What's the level of concern that American troops who are stationed in the Middle East might be a target of Iran?
The minutes come out in 4 minutes.
Are there steps being taken to?
So I'll turn this down right before.
Well,
again,
sadly,
it's gonna,
I mean, our troops in the Middle East.
I'll say it right before. It's going to be a little bit of Control F. We're going to look up a couple of things. The minutes shouldn't do much. If anything, I thought PPI would have moved us more, but you never know. Tomorrow morning, though, CPI.
Never not a concern.
And there's a couple things to talk about with this speech right now.
When it comes to force protection, because some other event somewhere else could absolutely have repercussions for you and your troops. So without speaking to specifics, never do that. What the force protection measures look like, they change all the time. They certainly are adapted to the situation, and the Defense Department will and of course be able to speak to what they're doing.
And are you seeing any evidence of potential domestic threats that people might be inspired by these attacks to do harm here in the U.S. to synagogues or any other?
I know of no specific threats here domestically, based on, like a spillover effect of what's happening between Israel and Hamas. I know of no specific threat streams here to speak to. But you heard the president talk about this yesterday. We're not going to assume anything. Because of the rise of anti-Semitism around the world, and certainly here at home, it makes perfect, prudent sense that we take the kind of action we have taken with local and state authorities to increase our intelligence posture, domestic intelligence posture, and to make sure that we're properly prepared to deter and disrupt any potential violent threat to the Jewish community here at home. And I think you'll hear the president talk about this a little bit more today.
Jackie, and then we'll go to the... Thank you, Corinne. John, this was a massive intelligence failure. Who bears responsibility for that?
You know something, Jackie? There's going to come a time when it's appropriate for us
There's going to come a time.
Take a look back retrospectively and see what the intel picture showed us or didn't show us, whether there's any gaps that need to be closed. There's going to be a time for that. And I suspect that our Israeli counterparts will do the same thing. Now's not that time. It's just not that time.
Can you speak to the reports that Israel was warned by Egypt?
I can't.
McCall from Foreign Affairs made that allegation this morning, saying that that was something that members were told on the Foreign Affairs Committee. So has that been discussed at all, or is that something you're looking into?
I can't speak to specific intelligence matters. Again, there will be a time to look back at this, as we always do, and we will. Right now, we're sharpening the intelligence gathering and cooperation and sharing with Israel.
Find out
as
what
we
team
should,
you support.
Since they're involved in active operations, and we're making sure that they get the tools they need.
Can you define what the direct link is when you guys talk about Iran not being
All right, we're going to have to
1
mute this
minute
for a little bit. You got 1 minute until the Fed minutes. So you could go to the Fed website. This is not hard to find. Again, I'm just gonna go Control F it. We'll see. I could even play the thing in the background, but unmute it. But you're gonna get a lot of headlines again. What you're looking for, it's pretty much just anything as to why they did what they did with the dot plot. How are they gonna balance the risks, the balance sheet, everything along the line, soft landing, hard landing, recession, base case, just all this stuff we've been kind of looking for in every minute, but it has never arrived. So keep that in mind. You got 20 seconds. Again, it'll be on the website. All you got to do is go monetary policy, meetings and calendar, and then you will go down here. Keep refreshing. It will show up. But there will be a lot of headlines coming out. Again, if you watch the wire right here on the screen, you will also get the info. You'll see, again, pre-written statements already out. And again, a lot of headlines will hit.
Hopping initially.
There it is. Where's it at, baby? No immediate reaction. Little stock market move. Hold on. There it is. So you got majority of Fed officials saw one more rate increase. Critical to keep policy sufficiently restrictive to bring inflation to target. FOMC minutes, auto workers strike poses new risk of economic outlook. They said that they need more data indicating abating inflation pressures. Officials saw risks as two-sided. Said that strike could push up inflation and hold down economic activity. Officials saw monetary policy working to restrain the economy as intended. Officials saw risks from rising energy prices, banking strains, and China's slowdown. A vast majority of officials saw a path of economy as uncertain. Fed meeting took place before latest run-up.
How am I down on these calls? What?
Honestly, seems like nothing, but it also does not seem as hawkish as the meeting. That's just off of reading the top headlines. It doesn't. Remember, last minutes we had a hawkish surprise.
These are tomorrow's calls.
Remember, the only other time, there was the hawkish pause, and then you had the hawkish minutes. This didn't sound as hawkish, but you're not really getting a violent
not affected the
reaction.
options pricing enough yet.
Control F.
Flagging.
Move is up. Bonds didn't move. Dollar down. I think it's decent for now. I think it's just more data dependent. Again, if anybody wants to read into this, though it's nothing, but you're probably going to say, is the tone more hawkish or not? That's all. Again, they did bring up the UAW, and the auto strikes, but we'll see. Let me go through here real quick. I don't know if you want. I could play this in the background while I'm Control F-ing. I'll mute it when I find something.
Thank you. Yesterday I saw a heart-wrenching stories of testimonies of Israeli families who lost their loved one, similar to the one that made you tear up on TV. One of them is the story of Hayim Katzman.
Oh my gosh, this guy got it on the turn.
Government, who is a peace activist. She's asking the Israeli government not to kill civilians in Gaza in his name. Is this a message that you encourage? And
somehow at the top of the channel, I'm still down on these.
Considering that today we have 11 UN workers have been killed, 4 journalists.
That's not what I was expecting.
So there's no mention of cut unless they're talking about foreign nations. Again, I'm going through here. They mention inflation 77 times, but nothing crazy again. The UAW stuff comes up a couple too, but so far it looks like all the other ones, and it does not seem any more hawkish than anything we have been presented with. I'm going to keep going, though.
And I can't stand here. I wouldn't stand here before you. And
okay. There you have it. There you have it. Two o'clock. Still have a couple hours. Ugly day for trading, man. Today was a complete liquidity grab. Got spoiled the last few days. Got what the SPY can do. The chop it can lay down.
Strikes one, but obviously the war in Israel, there's so many things that could kind of keep inflation continuing to tick higher. So it's certainly not without headwinds as we enter into the November meeting.
Right. So it looks like it's more on the short end here for right now. The 2-year, the 10 and the 30 remain lower on the day amid continued safe haven demand, to your point of what's going on in the Middle East. Okay. So we'll continue to follow anything here. Of course, the participants still, thank you, Caroline Woods, the participants within the Federal Open Market Committee are concerned about inflation risk to the upside, and the possibility of one more rate hike certainly is looming. At this point now, we are seeing the Dow down about 63 points. Joining me right now, Gene Goldman, Chief Investment Officer at Cetera. You may have heard some of the Fed minutes. I know it's sort of backward looking, but what are your thoughts?
Well, first of all, Nicole, thank you for having me on your show. Really appreciate it. So I think the thing to think about is that it's consistent with our theme that the Fed is pausing, but higher for longer. I know the Fed suggests that they'll raise rates one more time this year, but we don't think they're going to happen. Inflation's rolling over. We still need to see the impact of rate hikes on the economy. It takes 12 to 15 months. Higher for longer makes more sense. So we do think it's going to be consistent. Where I was a little disappointed, I didn't see enough about the Fed in terms of what they were talking about 2025. In 2025, you've got some Fed people saying maybe 2.6%. Others are saying 5% rates. There's a wide disparity, and there's a spread between the hawks and doves, and we need to watch that very carefully. So overall, consistent message, higher for longer, but Fed is pausing in our opinion.
I see. I mean, they did also say that they wanted to move carefully was the word they used within that report. So they are aware, because while there could be upsides risks to inflation, that the future for the most part was still highly uncertain. And so I guess they're still in this wait and see mode. That being said, we did get our print today for PPI, which was a little hotter, and the core part of it, food, energy, we know energy has been running up and is likely, if you talk about the path of least resistance, most of the folks I ask, energy is more likely to go higher than lower. What do you think about the CPI? Are we going to be facing higher inflation?
I think CPI is going to be a great number for the markets tomorrow. I think CPI inflation is going to continue to roll over, especially goods, especially housing, especially even food prices. Wheat prices are down about 15% since over the last 6 months or so. Good for there. Where we're a little concerned about services inflation should pick up a little bit. We saw this in the PMI indices. PMI manufacturing showed manufacturing prices paid rolling over, but services prices paid has been increasing slightly, so we're watching that very carefully. But you take all this together, This continues to show the story. The Fed should be pausing because inflation is rolling over, but services is still uncomfortably high. This is why the higher for longer. And one more important point. Look within some of the production costs. Copper prices are down. Transportation costs are down. This is going to flow through CPI pretty quickly.
Yeah, and they talked about some of the risks. I mean, as you noted, the risks that they are facing. They talked about oil could be an upside surprise, that food prices could be a risk as well for the market. At this point now, what do you tell investors who, you know, obviously we're getting yield, which we haven't seen in prior years or no time in the recent, obviously, investing time, right? Tell me a little bit about what you tell folks for investing at this moment.
Sure, great question. So we've been cautiously optimistic near term for a while, but that pullback of 5% in September offers some nice opportunities in the equity market.
What
we
the
think
heck?
equities have bottomed in the Q2. We think GDP
Goodness, you
will
went
be
that
much
heavy with the
stronger than
4?
expected. We think earnings will be pretty good. So we're starting to leg in on the equity side.
These
On
guys
the
play
fixed
to
income
lose.
side, we've been increasing our duration on the longer term assets. Think about this. We're about 1.75 over inflation.
Totally
Those are high
bluffy.
real yields. Those are going to impact the economy. So we do think bonds, especially high quality, are a screaming buy. We are worried about high yield. High yield, be careful. High yield spreads are too narrow right now.
I see. And, you know, they also noted, I mentioned this at the top, the UAW strike and how that's looming and that's still going on. And that could be a factor that could, in fact, dampen growth and could contribute to inflation, right? Because those car prices are likely to go higher on the heels of all of this.
True,
that's
but
another element, right?
But overall wage inflation is rolling over pretty quickly. Even that Friday payroll report we saw wage inflation coming down. Good news. So yes, auto workers likely will see an increase in wages, but overall our economy is seeing a slowing wage growth.
Yeah, that's true. And right now we're at 22-year highs for these rates.
Yep.
So we'll see what they do. What do you think about cuts? How about cuts in the new year?
Rate cuts in the new year? We think our base case scenario is probably the first cut around June of next year. And that's pretty close to the markets. I know the markets are pricing maybe 3 hikes. The Fed is saying 2 hikes. We see June, we'll start to see the effect of the economy and the rates on the economy. But keep in mind, remember, we saw this before. It takes about 12 to 15 months for a rate hike to fully feel by the economy. Rates started increasing in March. We still haven't felt most of these effects. Lending is slowing down. All this is going to impact the economy. Consumer will likely be impacted soon with lower savings, tax bills in California, of course, student loan repayment. A lot of pressures on the economy. But I think the most important point, do we have a recession or no? It doesn't matter. I think that even if we have a recession, it's going to be very mild.
Yeah. Just getting back to some favorite sectors of yours and investment ideas, healthcare is coming under pressure today on the heels of some news. Financials will be reporting, beginning on Friday and next week. On these pullbacks that we are seeing, are financials and healthcare a buying opportunity even today? And industrials is another area that you like.
Yes, all three are huge buying opportunities. I know industrials have had a huge run. It's our favorite sector, though. Think about the spending tied to agriculture, tied to defense spending. Countries are increasing the percentage of GDP allocated to defense spending. This will roll through into a lot of the industrial companies, especially defense stocks. Financials, yes, they're under pressure, but we think the recession, if we have one, proves to be milder than anticipated. This is good for financials. Plus, the capital markets have reopened. Think about how many IPOs we've had over the past few months. Things are opening up, easy comparisons. Healthcare is interesting. It's a little bit of a defensive sector, but lots of drugs are coming off patent, lots of new drugs, taking a lot of a lot of weight loss drugs are coming into play. All this together create opportunity within healthcare.
Right, understood. And we'll see JP Morgan Citi and Wells Fargo in the morning on Friday. United Health, PNC Financial, those are some of the earnings due out on Friday as we were talking about some of these names. Gene Goldman, thank you, of Cetera. Thank you for being with us. Coming up next, our next guest has his eyes on Salesforce and thinks right now is the time to buy. We'll get some details there.
There's the top of that channel. Still not green on here. That's crazy. Only a couple hours of theta decay there for tomorrow. Wow. How did I open these? Very curious on today's recap. Oh, these are still red. I mean, jeez. It was weird. I kept averaging down and didn't seem to do anything. I'd have made another average down. No, it's plenty big. I don't like it. I mean, breaking this channel though, we very well could start to complete this cup. This table's really annoying. Why is it rejecting that? Called, he had to see. He had to see.
People and their behaviors, they're different. So this economy is different. I hate when people say, you know, rates are still at historical levels, right? This economy was built differently.
Yeah, you know, at this point now, we're likely in this higher for longer environment too, right? We might even get one more rate hike. And you make a good point. Lifestyle is such a big part of it. And when I think about my grandparents, you could tell me how you feel, but most of my grandparents' generation, they never went out to eat, and if they went back to the old country once in, in 20 years, it was a big deal. That's what they didn't travel and spend in that way. They saved their money. But the big picture is that you could have a 2-income household and still not be able to afford basics because you are still getting squeezed. You have energy and gasoline very high. You have food prices that are still high, and to your point, rates that are at 22-year highs. So if you have a credit card bill, that's going to add up pretty quickly. We're seeing a lot of buy now, pay later, right? Is the consumer really getting squeezed as we move to the holidays?
They are. Well, back then, our grandparents, they appreciated the small things in life. They weren't so materialistic. In today's world, again, it's a lot different, right? I mean, that comes back to spending power, comes back to interest rates, comes back to talks around the Federal Reserve. Today's action is very interesting. I would not put what's happening over in the Middle East and geopolitical conflicts under the radar. The fact that stocks are basically negative or flat, and the 30-year Treasury is up 1.5%, TLT, and the 10-year Treasuries, yields are down, but bonds values are up. I would be very concerned at this point that this could escalate farther, right? Which might actually do the Federal Reserve's job for them. We saw the market.
Just need me to close some of those calls for it to
the 10-year Treasury
continue.
Go from 4% to 5% in like 2 or 3 weeks. That was equivalent to 1 or 2 rate hikes, right? So the market actually did the Federal Reserve's job for them. What about on the opposite side, on the downside? If things start to recessions, if a recession happens, if geopolitical events start to really escalate, what happens if the 10-year Treasury goes back down from 5% to 3.5% and 4%? The market could do the Federal Reserve's job for them. So I'm paying very close attention to that. But the thing is,
nice little VWAP test there.
As we go through these higher rates, expect some bankruptcies, expect some defaults, both on consumers and businesses. I mean, as these interest rates start to hit the margins, they really haven't hit companies' margins or the government's margins yet. I mean, companies and people and the government have over-leveraged themselves for years. But now $2 trillion of corporate debt, almost 20% of corporate debt needs refinance over the next 2 years. That's going to hit profit margins. 50% of government debt needs refinance over the next 2 years. That's all at higher interest rates, right? So these are things you have to pay attention to because it impacts people's spending habits. It impacts companies, R&D, profit margins. These are important things we need to pay attention to.
Still on a few more there.
Yeah. You do
would be much more diamond-handed, but
watching really closely
these suck.
Names like Salesforce, and the market is coming up off the lows after the
That's
Fed.
VWAP too. It's pretty safe.
Right now it's around 205.86 today. Why is this a name that you watch? Is this a name that you recommend folks buy for the long term?
Well, kind of the reasons I alluded to just previously, right? CRM, Salesforce, is defensive in nature. As we continue to hit what I think will be some pretty turbulent economic times, nobody wants to transition or get rid of one of their most important marketing and client servicing tools. Their CRM, right? Their client relationship management. Not only that, but it's trading at a huge discount compared to where it usually trades. I mean, if you put a historical multiple on the stock to where it usually trades, you're over $300 a share, and it's trading around $200 a share right now. The other thing that gets me excited is, last year, activist investors got really involved with the stock, and they focused on adding shareholder value and driving efficiency within the business. So that defensive nature combined with that discount that it's trading at gets us excited, and that's what we're kind of looking for with this crazy environment.
All right, and you have a couple of others here. You have AstraZeneca and Target.
There we go, SPY, all that liquidity all day, finally. Finally being released.
Are down today, but let's take a look at AstraZeneca. Your thoughts here?
So again, just healthcare and pharmaceuticals. I mean, defensive in nature. Again, it's a European large cap pharma company. I mean, it's focused on cancer, which sadly seems to only be getting worse in a lot of areas because of unhealthy habits that we all have nowadays. Trades at kind of a premium to larger pharmaceuticals, but it's actually growing their earnings twice as fast as other pharmaceutical companies. So pharma, again, is that defensive in nature stock, which is important as these geopolitical risks go higher, credit risk goes higher, and earnings, potentially underperform next year, in our opinion. I mean, earnings estimates for the S&P is at 12% next year. That's a high hurdle. So I'd rather be a more defensive in nature stock with stocks that are already growing their earnings twice as fast that are outpacing their peers.
Right, understood. And last but not least, Target. This was a real favorite and fell off. It fell off a bit, as TJ Maxx and some of the other names started to get more favorable looks from the analysts and the analyst community. What do you think about Target? I mean, we are going into the holiday season, and you still have an environment where people are trying to shop a little more moderately, and Target would probably fit that.
There you go, SPY.
Yep. I mean, this all comes back to the stock already being discounted, right? Stocks that, outside of the
We're
top
doing it
7 or
today.
10 stocks in the S&P 500, you look under the radar, the equal weight S&P is down like 2 or 3%.
Close some more at high day.
Getting discounted. Target's one of them. When you're now getting double
make
the
it there.
dividend yield of Walmart at half of the multiple to Walmart, you have to consider picking up Target.
Still wrecked on my dailies that opened this morning.
Recently, I mean,
I didn't
Target's
close.
got some pretty easy comps to hurdle
Why?
over the next year. I mean, look at I wasn't a really good basketball player growing up, so when the bars and the hurdles set pretty low, that's kind of what I need to jump over it, right? So again, it comes back to that projected earnings growth next year, and the S&P 500 set pretty high. I want a stock that's hurdles already set pretty low. Again, that's Target.
And I really think we're seeing the stocks are telling us the story. You see this chart, Target is at a new 52-week low. And I just pulled up Alphabet Google, which right now is at a 52-week high. It really just shows you the divergence that we're seeing in this type of market. Final thought, Luke?
No, I think you have to be very selective. I mean, this all comes back to the whole idea of active stock picking. And frankly, I hate the term, everyone uses the term cautiously optimistic. Okay, cool. What does that actually mean? In this world, there's a lot of interesting and bad things happening out there, and there's a lot of stocks that are hitting all-time highs. And frankly, the top 7 or 10 stocks are carrying the whole S&P 500. So look deeper into the market, the equal weight. Look at those stocks that have already been hit, that are already discounting bad things to happen, because that's in the equity portion of your portfolio. That's where you want to position. And don't be afraid to look at bonds when they're paying 5% right now. And if rates do go lower, you can potentially get some. In the longer duration part of your bond portfolio, you could actually get some equity-like returns in the bond portion of your portfolio. We had the worst year of bonds in history, essentially the past year, 2 years. We could have one of the best years in bond history coming up, right?
Luke Lloyd, thank you so much. Good to see
We're
you.
gonna move back to VWAP.
You need to control the spending too. I mean, that's the other part of it.
They do.
I'm gonna stop on the rest of these.
If everything with fiscal policy, monetary policy, and you had a
Accepting
good
the loss
wage,
on
but you
the
got to
dailies.
always be a little conservative on the spending. I'm talking
That's exactly
to myself.
right.
Luke Lloyd, thank you.
Me too.
Good to see you. Right, Warren Buffett says, don't go and buy coffee. Make your own coffee at home. Coming up next, how much will the ongoing crisis that we are seeing in the Middle East, as it continues, that strife continues, and how it could affect the markets? We want to do some research, somewhat of a historical check. Managing Director of TD Cowen Washington Research is joining us.
Much background noise. Guys are so aggressive. I'm gonna get stopped out here. Would have won with my 410. What's up, Taryn? Yep. Today's not quite like yesterday for me yet, but it worked out nicely with this rally. Saved me much bigger losses. Don't think I'll be able to end the day flat, but maybe. Oh, good day so far. A little stressful. If we complete this cup, I'll probably be able to beat green. What's up, Jay?
I think the real big linkage here is there an implication with Iran, and does the government of Israel sort of have a score to settle or some retribution to Iran if they had in fact aided Hamas? And so again, that could also raise inflationary or cost pressures around the world, and so those again complicate the market. Have many other spillover effects beyond just defense and energy and related segments.
Yeah. I know you had Lockheed Martin in your note as one of the names that one of the defense stocks in focus. I think Raytheon was another that people have been talking a lot about throughout this week. You also mentioned within your note about Hezbollah from Lebanon, and I mean, I heard at least one report saying that that some rockets had come in from that side as well. I think it was 3, but I can't confirm that report. It was something I read briefly, probably in the elevator. That being said, tell me some of you said the next few days are critical. Right now, the S&P 500 is sitting at 4361. What are some scenarios here?
Sure. Depending on how you follow social media, I mean, I think there's even reports now that there may be some additional air activity over northern Israel and around the city of Haifa. Really, I think the opinion of a lot of folks, regional experts, is that if Hezbollah were to get involved in a major way and open up that northern front, that would actually suggest some sort of Iranian approval or assent to widening the war. So certainly that is a key indicator that this could go further or expand further. And then, clearly the Israeli government, the Netanyahu government, has said that they intend to push into Gaza and end Hamas as an organization, or some sort of statements to that effect. And if that ground campaign does start to take effect or begin, then you're going to have really the rest of the Arab world react to some degree or another, and that could have broadening implications as well. So I really do. The one thing I want to stress is that this is still an unfolding situation, and we're still. I think we're in sort of what the immediate phase of the security operation would be for the IDF, the Israeli Defense Forces, to sort of secure their southern territory and really still undergo recovery operations. And again, there is the issue of both Israeli and Western hostages that are somewhere have been spread out somewhere, are still missing.
Yeah. I think that, you mentioned that you don't expect the combat to end anytime soon. So assuming that keeps going until further notice, and how it could possibly escalate if there were a coordinated effort. Just keeping it on the markets here, you're talking about the risks to the markets, and that is a risk. If sanctions that have been loosened are reinstated on Iran, for example, that too can be a market-moving event, right?
Absolutely, and I think that's, right now there's some political implications as well as market implications, and the Biden administration had been trying to sort of establish at least some sort of diplomatic bridge with the Iranian regime. Obviously, there's a lot of criticism going on right now from Republicans about the hostage release and the $6 billion payment for humanitarian purposes to the Iranian government. And so clearly there's going to be more pressure, potentially if that linkage with Iran is made. But then there's also, sort of the longer term spillover effects. And let's remember that Iran is supplying Russia with weapons for its, war in Ukraine. So, you can sort of daisy chain some of these relationships together, and perhaps they're not completely unrelated. I'm not suggesting there's a wider conspiracy, but these things all do tend to move together. And I think one of the things that the Biden administration and European governments are doing is trying to prevent that spread, to allow some sort of perhaps stability to settle in, so that markets will stabilize and that you don't get these spillover effects longer term.
Yeah, and that's a key point. Roman Schweizer, thank you. TD Cowen, Washington Research Group. Thanks for being with us. Still ahead, we're watching utilities. This group has been the worst performing group of 2023. So could a rebound be on the way? Let's examine that. As we head to break, take a look at winners and losers in the S&P.
In this challenging environment, the indices are hanging in there pretty well. You can see the rally we've seen off the lows from last week, Wednesday. We revisited that low Friday, if you remember, initially after the better-than-expected jobs report, but unable to take out the lows from earlier in the week, which is on the left side of your screen. Again, Wednesday down to 42.35, Friday down to this 42.40 level, and then the trampoline bounce off of that lower level, the bungee jump up. You can see how we've rallied up to 44.19 yesterday, and then again, kind of sideways, mostly range-bound, limited in terms of real conviction today, one way or the other. The minutes didn't really tip the scales, but you can also see a pretty well-defined trend environment that's been playing out here, bottom left to top right. So we've been hanging in there, holding in there pretty well, taking out last week's highs. So this kind of puts the buying we've seen off that low from last week into perspective. And again, you can see just some of the strength, the significance of this move here. We're talking about a bounce off the 200-day moving average in the S&Ps, a brief visit below last month's lows, but trying to recover here, trying to work our way back into the range that we established throughout the month of September. Again, this is investors focusing on the positive, discounting the negative. It's also a bit of a technical move here, as that was the 200-day moving average that we came off of around that 42.30, 42.40 level, that low from last week. I want to point to the fact that the Russell small caps in this higher rate environment are still kind of struggling here right now. They've been a bit of a canary in the coal mine in terms of some of this weakness, but you can see here trying to also sort of regain composure, bottoming out this week back above 1,800. I think it's going to really come down to that CPI number I mentioned tomorrow, but also, Nicole, you've got some earnings due out later this week that investors, traders are going to be focused on for the most part throughout all this, though, focusing on the positive, still discounting the negative.
All right, thank you for that. Good to see you, Ben Lichtenstein. Thank you. Let's turn our attention over to the utilities sector. And often it's a safe haven, it's a dividend payer, but as tech has been roaring higher in 2023, utilities have been forgotten. In fact, the worst performing group, down more than 15% year to date. So are we due for a turnaround? Jay Reams with us, CEO, Reeves Asset Management. Tell us your thoughts on utilities.
Clearly have been really a terrible performer year to date. Higher interest rates have been a challenge, and a lot of people come to the sector for income, of course. And increasingly, those investors have chosen to buy money market funds or other kind of high yielding fixed income funds. Yeah, and that's really caused a reset on utility valuations. In other words, dividend yields needed to come up. Today, the current yield is up about 60 or 70 basis points for the sector since the beginning of the year. But if you go out a year, you can get a little bit more than a 4% yield by buying the utility sector today. And what's kind of interesting about the sector as an investment option is you really haven't been able to get 4% yields, often over the last decade. Really the last time was back in the 2012, 2013 timeframe. So valuations have really come down relative on an earnings basis relative to the S&P 500. Valuations are about at 20-year lows. The caveat is if interest rates keep going up, the sector is going to struggle to do well. But I think there's enough of a coiled spring there that should rates flatten out or maybe even come down, the sector has a really good chance to be an outperformer over the next 12 months.
So that's interesting as you look at that. I mean, and you think about the long term, how utilities could grow, should grow, despite a higher rate environment, right? When you think about what ran this group down, is it when people say to you, will it be worth it? Even, you know, because you get paid to wait to a certain extent, right? Is it worth it?
Yeah. Well, I think from here, it should be worth it. But, you know, we'll see what happens with interest rates, of course. You know, all I know is that, you know, as the Fed's gotten to the end of the rate hike cycle, you know, if you look at the last 8 times that's happened, you know, bond yields have declined, you know, every time on average about 100 basis points. So, you know, historically speaking, you know, we could be towards at least a relative high in rates. And so that's an opportunity there. In terms of kind of the volatility we've seen and whether or not it's worth it to hold on to the stocks, you know, I think most utilities are in a good place. Where the volatility has come from has really been 2 places. It's, you know, one, renewable development, and clearly higher interest rates have hurt just non-utility, non-regulated renewable development. They're highly levered projects. They're highly contracted, so theoretically they're okay being highly levered, but the higher interest rates have really caused power prices to rise for that, and new contracting has probably come down a decent amount.
Okay, I just closed out
Smaller
one of those
companies,
calls. We've got
the
14
wildfires
left.
in Hawaii really drove the utility
10 minutes
there,
to power
Hawaii
hour. See if we
Electric,
can
to the
continue
verge of
this cup.
bankruptcy. And I
We are at
think
VWAP though, so this
that's
might be where it wants to
caused isn't,
close.
you know, for everyone to worry about wildfires in every part of the country, but more so the impact of climate change, the impact of more extreme weather events, and the ability for these utilities to run safely in those kind of extreme events. So, you know, really just a reassessment on the risk for all these.
Okay. You know what? I want to jump in here because we're out of time, but I don't want to leave out the alternative energy and when we look at other ways and as we move forward.
Maybe I can do over the weekend. Does that speed it up at all?
As we move forward for things like that, are there specific
After
names
CPI,
or
I'll probably do it.
types of names within utilities that you think may be better off than other utilities when you break down the sector even more?
Yeah, I mean, I think there's 2. You know, one in particular, you know, this at higher rates really.
Everybody's calling.
Good balance sheets. NiSource is a solid utility, good growth plan, good management team. The only question was
It's got to even have a
how they were
king
gonna finance it
or
all.
queen.
They were able to sell an asset earlier this year, takes care of their financing needs for the next couple of years. So that's good. And you know, on the power side, Constellation Energy is the country's biggest producer of nuclear power, and nuclear, I think, is really set up to be a solid investment, solid power choice for Americans.
Right, CEG, Constellation Energy, and I for NiSource, Jay Rames, CEO of Reeves Asset Management. Thank you for being with us. Appreciate it. Thanks, Jay. Still ahead, we'll bring in our panel to discuss Fastenal. The company will report its earnings tomorrow morning. We want to get a preview on this name coming up.
You got mad at me. We're self-provoking of that anger. You told me not to get mad at you for it. Why would I be mad at you? Because Rivian's going bankrupt? I mean, it can't rip. Probably will. Brad might be going bankrupt. It calls on that thing, it's ripping. Yeah, did your spy calls ever work out? Did you hold those long enough? Yeah, closing another one. Fidelity is what messed me up today. I just put the day off on the wrong foot. They screwed up my mental state. Yeah, Tup's going. It's up 38. Jones up 24. WeWork's up 20. Brad was up 20. I think it's back down a bit now. Brad's up 10 now. Some of the guys at this table play super tight, some play super loose. I really need to start memorizing it. He plays tight. Okay, check. Like these guys all play really loose. Fatality. Yeah, a little missing trade till, and then just... yeah, then just frustrating. And then today was not a good day to try and force trades, being it was mostly just a chop. Yeah. Yeah, because we were watching WeWork when it was right here. I went. That's when I found out. I went to buy shares of it. And it said, "Oh, you got to call." What? So it's like 10%, still not crazy, but I'm over it at this point. On that trade, I'll wait for it to come back down if it does. Entry is so important. I figure out who's in this hand to figure out who actually has something. I think he's pretty loose. He's not. Back 10? He had just a pair of 10s? Dang. Sorry, I didn't realize music went off. Tough retesting those highs. Joan. 25% on Joan. SPY looks like it wanted it. I think I still have, yeah, I still have a few calls. Mm-hmm. $5 and up. I don't think so. Oh, maybe actually. I didn't realize it was so high already. No, 5's the high. I don't know, man. That's a. These rebound rallies, like usually they're less. They're not as high. I see 3, 7, 20. This whole area is pretty big resistance. But it is looking good. Looking good. There you go, SPY. SPY still rallying up. Making it happen. Guess I could have held those other calls longer. Nothing is impossible. 50% on top. Yeah, I guess that double top is at 50%. That is neat. Oh, I'm getting kicked out. That's right, I was getting wrecked in that table anyways. Starting to play just loosey-goosey.
Until today?
Until today, and I think the headline when I read it, when early in the morning, I see the headline that they stopped the trial of it, and then I'm sitting there going, well, why is that a positive?
Yeah, because it was so good.
But yeah, it's because it's
that
so
rarely
good.
happens.
It's basically the regulators are basically saying it's going to get approved for this anyway.
Yeah, it's not something you hear very often, frankly. All right, an incredible move here. The stock now trading back to almost $100. After trading at $50 a year ago.
Yeah.
So I mean, it is it's the best performing big pharma company.
It's now the largest by market cap stock or ADR here, but stock in Europe.
Okay.
Yeah.
All right. Good stuff. Okay, you got a couple other trades here. One is in Alphabet, which is up almost 2% today after making fresh 52-week highs yesterday. Following through, I think this is a really big deal that there is now 2 mega caps doing this.
Yeah.
Meta and Alphabet.
Yep, we were talking about that earlier. Both hitting over 1.5-year highs, so the sentiment's been pretty bullish in there. Now remember, they still have some regulatory concerns. They're still battling right now with the Department of Justice on those fronts. Regulators across the globe basically coming after them. But I think if you look at maybe the reacceleration in YouTube revenues, and then also the fact that the pullback in advertising spend, digital ad spend, isn't really taken place, and that's only benefited Google Alphabet because of the fact that everybody thought everybody's going to switch to Bing, Oliver, and that's not going to happen.
Yeah, that was so dumb.
Yeah,
Bing
it did
is
not.
still terrible.
Yeah, it's not my favorite. Yeah, and they're just released a bunch of new products, their new phones. They've got their ChatGPT rival, Bard, that they've got all these new AI inputs into that. So they're already implementing a bunch of their AI capabilities into their search. And yeah, we see some call buyers in there too. But they went out in duration on these, so giving themselves just over 2 months until expiration. Saw a buyer of the December 145 strike call were purchased, average debit of about $5.05. So you're paying a pretty hefty option premium for these. It takes your break even just above 150 over the next 65 days. That's 7% above the current share price. They do have earnings.
This
on
dude
the
River to
24th
full
of
house.
this month, so we'll probably get some
Slow playing those
clarity,
nines so hard.
as far as growth
Wow.
in here and margins. They have expanded those margins as far as Google Search and the Google Cloud. Also, an impressive 28% increase in their revenue last quarter. So yeah, we'll have to wait and see for earnings on the 24th, but giving themselves over 2 months in this position with the expectations we're going to see Google Alphabet trade above 150.
Okay. Last one you got for us that is going the opposite way.
Yeah.
So both these trades bullish, and Novo and Alphabet. And Trade Desk, which got a really interesting chart right now, chopping back and forth right after making fresh highs on a 52-week basis in July. But it's been very choppy since those earnings. And we've got another one coming up pretty soon here, the report. Someone's fading it?
On the 8th of November.
This guy plays slow. You guys all play super
the stock's
aggressive.
still up 88%, and it goes back into that digital ad spend conversation we just had about Google Alphabet. There hasn't been a pullback like basically like the market thought there was going to be. And if they look
Hi
at
there
the
on
total
SPY.
addressable market in the digital ad space spend, I think TTD, the CEO, just came out recently on the last earnings report, said $830 billion, but it's still expensive on
Round up
valuation compared to others in this particular space. They did just sign up Warner Brothers Discovery, Walmart, their list of partners, so they continue to grow their footprint, but this is an expensive stock. You've got that earnings event coming up that first week of November, and somebody taking the opposite view here where we might see a
still
pullback.
climbing.
Saw a put buyer out here in the November monthly cycle, so you'll capture that earnings event. 37 days till expiration. Trader bought over 8,000 of the November 17th, the 75 strike puts. Average debit of about 230, so that break even of 72.70 over the next 37 days. That's about 14% below the current share price. So you need a big move to the downside. But remember this, after their last earnings in mid-August, this stock traded below 70 bucks a share. So it's had a nice rise, as I mentioned, 88% this year. But somebody betting that, hey, maybe we're going to see some weakness on that earnings event. Maybe a pullback in the overall market drags this one down. But I think this is going to be about valuations moving forward because it's still elevated compared to peers.
What's interesting, though, is if you pull back for the last couple of years, it's gone pretty much sideways, which in some ways is almost encouraging because it has maintained basically its COVID elevation. It has had quite a bit more stability than some of the other high growth names, and I guess that does speak to the resilience and market dominance that is only shared between a few major players in the advertising auction space for streaming and stuff. A lot of people have tried to kind of chip away at their position in the market, and it just hasn't worked. So, but someone fading it here into the earnings. Thanks, Tom. All right. Shares under a little bit of pressure here. Coming up, let's get an update on the cruises as an unsurprising, I would think, issuance of debt by Norwegian has the shares down again.
You know that tech stock?
might put a trailing stop on these last few. What do I call that? Let's see. Like 15 cents. Either looks like it's gonna fully finish this cup today. I think my count will still be down though. Yeah, still down. I need like, I think they're 437, so I need like 438 to get into the break even on it. Fortunately.
Those highs that we did see earlier in the session before the release of the PPI data. So renewed optimism here for a third session. And I think, as you pointed out, the dollar is actually coming under some pressure now. And you're seeing rates adjusting, the short end of the curve kind of holding up, the long run backing off now based on some of the, the storylines here and themes the last couple of days. And we'll see. Tomorrow's going to be a big day. The data this morning a little bit hotter than anticipated. So we'll have to see if it's confirmed tomorrow or not. But overall, modest optimism here. And particularly coming out of the Fed minutes, that's when the market really seemed to catch a leg higher after digesting the release of the Fed minutes.
Yeah, the FOMC, I guess, seemingly confirming that we're not getting another hike this year unless something shocking happens for inflation.
Seems like it, Oliver. Yeah, I mean, they basically said that it's a two-sided risk to the market as far as economic activity to the downside and unemployment to the upside. And overall, though, they still feel that they're going to have to be restrictive or higher for longer kind of camp. And it does appear that all the officials agree that that's going to be the theme moving forward unless something significantly changes. But overall, the theme this week, or the storyline, has been that most of Fed officials said the market has kind of taken that hike out of the market because it's been priced into the back end of the curve. And we'll see if that plays out.
Okay. So as we get to the minutes confirming what we've heard from other speakers, what's the potential here for surprise then, Dan? I mean, do you think the kind of shifted back, putting bears in a corner and needing a big shocker CPI to get more market downside?
Maybe. Yeah, it might be, Oliver. I mean, the market got pretty oversold at the end of September. Basically, you did see the sentiment and the seasonality components that the market tends to display during the end of or during that month really come to fruition, I should say. And initial selling early in October, but now we're realizing some decent upside momentum coming off that 4,200 in the S&P. And so it does feel like even with today's data and the market is still higher on the session, that you're right. I think that unless, if we get a significantly higher number tomorrow, then that could flip the script pretty quick. But overall, if the market, if the numbers come in tomorrow in line or even maybe slightly higher than where they're expected, it doesn't feel like that will be enough to kind of stem the current pressure to the upside as we climb back in to that range that was established throughout the summer now, as most of the major averagers are kind of getting back into those levels that we really carried throughout, basically June, July, and August.
Dailies.
What role do you think crude is
Dailies I need to be out of.
Market's buoyancy right now, Dan?
Before
I think it's
noon.
helping, Oliver. It's helping the sentiment in the fact that it's backing off. And we got the pop on Monday. We filled that gap today in the futures market, coming back down towards the low end of the range for the last month. And again, you and I talked about this, I believe it was last week. But, the interesting dynamic here is RBOB, basically trading at the lows of the year. And so if you look at that, you want to, incorporate that into your inflation outlook, that would be something that would be worth considering as a consumer expense and how it might impact consumer spending moving forward.
Coming up in a 10 minutes Fugazi.
Good thoughts, and I think it makes sense. Appreciate Dan.
Right on time for the full cup completion.
KKM Financials, Dan Deming. Let's go to Jenny Horn, our own Jenny Horn, host of Next Gen Investing, of course.
And I.
Story in a market that will also see some ramifications if crude oil prices subside. That is, the cruise lines and other travel.
Put a
names.
trailing
But
stop in this
right
last
now,
one.
Jenny, it seems like the market's got more of an issue with their funding mechanisms.
And I think shoring up so many of these companies' balance sheets, because I can't think of a single sector that was more hit by the pandemic than the cruise line industry. And I know they've been having really great years, especially from Carnival as well as
Did
Royal
a 20
Caribbean.
cent, a little tighter than the last one.
Norwegian does still have some major work-throughs to get through. They're only up about 26%, let's call it, on the year, versus Carnival's up 57%, Royal Caribbean's up 80%. But they have balance sheet issues. So that, I think, fits today's news, where a unit of Norwegian's holdings did kick off a $790 million junk bond sale to refinance its overall debt. Now, what was significant about this is the pricing discussions of these senior secured notes called for a yield around 8.25%, which was below what had been initially discussed at around 8.5%. Now, the proceeds will be used to repay the outstanding term loans under the company's senior secured credit facility, according to a statement. The debt is backed by about 14 of their overall vessels, which is secured by the company's senior secured notes. They're not due until 2028. JP Morgan is reportedly leading this deal, although we did not get comments from either JP Morgan or Norwegian confirming the matter. But resilient demand for travel has fueled a lot of investors' appetite for
Actually might be red on the day.
that were crippled by the pandemic,
See.
but have seen obviously the resumption of their fleets and returning to
Overall.
a more normal traveling world. However, they had seen a lot of debt that sustained them now to get to here. So now they're sort of shoring up those balance sheet, repaying a lot of these debt levels. We could see possibly the dilution of shares as a result. But again, these are companies that
stop
will
losses.
continue to rebound, continue to recover. I just think it's going to be more of a wait and see story. It shouldn't be a surprise that these companies have crippling levels of debt, especially the cruises that were completely halted for over a year at one point.
Yeah, this is now the second instance in the last week of a company stock getting hammered for issuing debt or raising equity or doing convertible notes or anything in that category of tapping capital markets, when it should have been clear that that's part of the plan. The other one being Rivian that I'm thinking of that had to do it. Norwegian obviously getting hit. I mean, and it's a pretty big hit too, 6%, back below $16.
Not as bad as Rivian was down 20% though.
That's true. That is true. All right, thanks, Jenny, for the look here at the cruise line. Big loser on the day in a market that is still up. Let's talk about the big picture. Now that we've got some Fed commentary, as well as a good chunk of data the last 5 days. We're just waiting on inflation tomorrow. It's just the Russell that's missing now, as we got the Dow positive since our program began here this afternoon. More ahead on Market on Close when we come back to take you into the bell.
Mints Fugazi. There it is. And I'm out. Okay. I can start. Sick. Oh. No history on there. When did I get into this? $9.48. I think that was the first one. $9.48. I think that was the first trade of the day. Okay. Yeah, I think that was my first trade. 9.48. Yep. Stupid breakout trade. I gotta trade the breakouts with a retest. Got it right here on this breakout. Yep. 4 calls, dailies, 437s. Did this. I didn't stop myself out. I should have. Again, this is on one of my accounts. I only do one trade a day, so thought no. See if it double bottoms. Then it came here, and it's like this isn't a good time. And it kept melting down, and literally we just didn't see that all day. I almost closed it there. I should have. That's when I should have closed it. But yeah, I mean you can see it was like we weren't there all day until now. But dailies are, worthless now. So, but anyways, yeah, I should have stopped out of that one. 9.48, and then second trade. I think this was the second one. 10.56. Calls. Got one call at 10.56. Yeah, I was waiting for this break. It was channel. It did right here. Grabbed the call. Should have closed it because that was the top of this other channel. I don't know if I had that in there by then though, but I didn't want to because again, this was only one account, so stupid. And just held that one till down. I held till 239. So 239. That one actually might have turned to green. Held it till here. Was a 430. Yeah, that one actually probably would have turned green, being that much in the money. Oh well. Yeah, so those are dumb. Then on the third string, where I don't have that in my head. 5-minute finger slap. Here it is. Still have his trailing stop on. It hasn't closed yet. Just gonna close it. My spread was too wide for the trailing stop, I guess. Which is good. Kept me in it. Okay, close the final one. So this trade was stressful, man. It was green, but it was stressful. Those stupid trades on the smaller accounts. Let's see. What? What's going on here? Not showing me all of them. Oh, AMC. Yeah, I closed AMC calls today. Or for next Friday, so I just got out of them. I was up on him, like 40%. Oh, barely stopped, but it worked. Little pepperoni at the end. And then for SPY on the third string, started buying calls again. Very early, could have waited. Could have waited much longer. 12:07. Tapering takes time. 12:07. Broke that channel. Was showing a higher, not a higher low, but showing a rounding bottom or tapering. I got 10 calls there. 12:58. Yeah, those just kept bleeding. 12:58 this break. I think I had another channel in there when I got these. Yeah, I bought 15 more. So 25 at that point. $223. Right here. I didn't have a real good signal before then. I was waiting for break of this channel, so it was confirmed. I didn't want to try and grab it because we could have just as easily. We kept kind of breaking through the bottom of this channel, and I didn't want to dip by anymore. I wanted to wait for the confirmation. So, anyways, bought 5 more at 223. Right there, like right around VWAP. And yeah, I was red on those. All the way up to here, I was still red. It was weird. I sold my first 10 for a small loss. I had what, 30 at that point? No. 10, 25, yeah, 30. My first 10 for minimal loss at 221. Wait, what? That was right after I bought those? No, those are 108. Oh, that's when I sold. 108, I thought I bought it a little earlier. So 108, that's when I got those that final purchase. Right here. Okay, yeah. And then I sold my first 10 at 221, but somehow these were still down a little bit, which is insane. So right here, sold my first 10. Then I was feeling better. We were getting closer to break even. And it seemed like the change shifted and we're rallying. Closed my next 5 at 223. VWAP. So then these are all profitable. And then I started closing them one at a time. 249. Right here, closed one. Closed another one at 249. Closed one at 252. Kind of sprinkling them here and there. Seemed like we might just chop and VWAP chop and end a day, so it's just slowly closing them. And 255 I closed one. Trying to just catch kind of the high up here, which I did on that one. 256 I closed one. Could have held these a lot longer though, look at that. 256 I closed another one. And then 257 I closed one. Like yesterday and today, remember, for like the last 2 hours we just chopped around VWAP. Sucked. And then I was starting to see, okay, we maybe keep rallying, build some liquidity. So not quite yet. Let's see, 314 I closed one right there. 316 closed one. Yeah, could have held these a little longer. 316 closed another one. 334. Yeah, this is when I'm like, okay, I'll start holding these a little longer. 334 I closed one in this little bull flag consolidation. And then closed one at 345 up here. One at 346. One at 347 here. And then the final one at 356 right here. So pretty stressful for today, because I was not sticking to stop losses on my small accounts, and then that just kind of sucked. Fidelity got in my head a little bit too, and then the main stress though was holding this large position as we kept grinding down on this channel, and it just seemed like we're never going to actually realize all this liquidity that was being built. And coming into FOMC, that was stressful because I don't know which way it's going to go for that. So yeah, didn't like all that position, all that exposure I had before FOMC. And yeah, starting to go long much too early, or at least not stopping. I could have, I guess, stopped out of some of those, but I like to just average into it. Just need to start, take my time starting into it. But yeah, up on the day, which is very awesome. I was down, it's pretty significant at one point. Yeah, not as easy street as yesterday. Yesterday was a little stressful just because I was averaging into those puts for a while. Same deal, waiting for the reversal. But I wasn't down as much, and it didn't go against me as long. Maybe, I don't know. Just more sure of it. And then it happened earlier in the day too. I didn't have to wait so long. It happened at like 1 o'clock. So, but yeah, let's see. Down that. But yeah, green just a bit, which is fine. I mean, yeah, even neutral on today I'd be fine with how yesterday was. Pretty good. But I'm just making only one account. I need to I need to learn how to do it in the other accounts. Kind of strange. Maybe I just need to do trade tomorrows and not just do dailies. That could be part of it. AMC up 5% on the day. Still looking good. 1073 is next resistance. It's not quite there yet. It's got lots of gaps to the upside, of course. SPY ended up 0.41. Oh, what? It's rallying after hours? Could have held those calls? Always leave one for the homies. I know this. Even after hours. I could have. I should have. No, to leave one for the homies. End of day. Oh well. AMC's up. Yeah, AMC's up 5. Got GME. GME's down 1%. Just rejecting that resistance. We're getting close to it at least. Tupperware had a big move, 55%. Ended up closing. Wow, that's a super bullish candle. Closing at the highs. This thing might have a pretty big rip tomorrow also. Got RAD up 13, continuing its nice trend. GNS, wow, GNS sold off today. We're starting to see that. I think so. I think I was mentioning how this top is kind of tapering. That's down to 8.4 now. I don't know what else ran today. Cosmo Kramer. I guess that's it. Thanks so much, guys, for your support. I appreciate it. 23 likes on the stream. Well done. We had a fun FOMC. We've got CPI in the morning at 8:30. Initial jobless claims at 8:30. Wow. Could be in for some fun. Thanks, Guts. Thanks, Jay from the Bay. Thanks, Taryn. Thanks, Kitty. See you guys on Discord. Good rest of your evening. Okay, peace out.